All right. So I just started recording. We just had a quick little powwow, quick little conversation that's not in the recording. But anyway, today we're going to be really talking about this. This is going to be the essence of what we're talking about today: supply and demand. Um, I've talked enough about price action. I've talked enough about market structure. I've talked enough about a lot of things. And this is something that is so important. Um, do not think that this video is going to mislead you. It's going to actually lead you exactly where you need to be. Trust me on that. So, with all that said, and with what everybody here heard today so far, I'm gonna start. I'm gonna start now. And what better place to start than to, because this is how serious I am about this sometimes, yo. What better place to start than to invite God into the whole thing? If you don't believe in God, so that's on you. That's neither here nor there. It's not important to, just let me do me. Okay. So, dear Lord, dear Heavenly Father, I pray, Father, that this teaching session is one for the books. I invite you in to this moment. I pray, Father, that you give me the wisdom and the insight and the vocabulary, the verbiage to articulate everything that I know I need to. I pray, Lord, that you bless my mind to stay on track, to not be sidetracked. Pray, Lord, that you speak through me. You created this world. You know what I'm about to talk about. Help me facilitate this information to the best of my ability, also in the best way for the masses to understand everything that I'm about to talk about. I know this is not hard. Help me not make it harder and more complicated than what it is. In Jesus' name I pray. Bless me, Lord, as I try to fulfill this purpose and this mission. In Jesus' name, amen. All right. So, where do we start? I got goosebumps, but where do we start? Do I draw something, or do I go to a chart, or do I just sit and talk? What do I do? I don't know. Let me share my screen. Okay. So right now, I'm just on a chart. I don't know. So, all right. Let me look up something. Um, does everybody see this this image? Okay. You said best way to learn is on a chart with real candles and real examples. Later, I'm gonna use a picture of an empty shelf at a grocery store. Okay. So, all right. This is balance and this is imbalance. I was walking I was walking last night in the grocery store. I was on the phone with my girlfriend who's in the call right now. First of all, if you drink kombucha, it makes no sense to me. Honestly, I tried it yesterday for the first time. It was garbage, okay? Don't drink that. It, anyway, I was trying to go in and be like, oh, I'm gonna go ahead and try it, and I was trying to figure out which one to get. She was trying to tell me which one to get and everything, and it was just like, it was a whole ordeal. I wasn't holding the phone steady. She was getting mad out, and I'm just like, bro, like, so I just said, you know what? I was looking. I looked at the shelf, and so I saw where there was a lot of kombucha, and then I saw where there wasn't a lot of kombucha. And I said, you know what? I'm gonna just go ahead and buy this one because clearly there's not that much of it on the shelf. It's clearly the one that's bought the most. Hear what I just said. It's clearly the one that's bought the most. It's the one that's going off the shelf. There's only like two of them, but there's like 5 or 6 of these. Let me go ahead and buy the one that clearly people are coming over and over and over to pick up and purchase, to buy. Okay? I just did supply and demand analysis in life. Are y'all tracking me? This is something that we all do. We already know it. That's why I'll be like kind of frustrated when people get mad at me for teaching it because I'm like, bro, you already know this stuff. You already do it anyway. Every time you go to the store, you'd be mad as hell if you went to the store for something and the store ain't have what you wanted, right? And in that moment, you'd be like, bro, let's just say conceptually, you'd be like, man, I would be willing to pay an extra couple dollars to get it right now if they had it, but there's none available. Your demand is still there. It didn't go away. You still have a demand for that jacket or for that sweater that is no longer there in your size. And you don't feel like driving across town to another store. You don't feel like ordering it online to wait. You went to the store because you needed it now. Because you trying to buy something to wear tonight because you got to go out somewhere, right? And so your demand for it is pretty high, but it's not there. And like whatever the reason is a reason. The reason why you want what you want, that's price action. That's market structure. We don't care about that. Oh, price broke this and price whatever. We don't care about that. The point is that okay, why you want it don't matter. The reality is you still want it. But it's not here in your size. You ask the people, hey yo, do you have this in my size in the back? Then what do they always say? Because niggas don't like to do their job and go look. They be like, oh, if this is all you see out here, then this is all we got. Sometimes that's the case, but nah, they just don't want to go look. Okay. So I'd be there and I'm like, damn, like this shirt only cost $12, but I would be really willing to spend 15 or 17 for it just to have it right now. You see how like you see you see where the supply and the demand is? It's not because the shirt is a certain price. The shirt could have been $4. It could have been a little t-shirt and you really needed it because yours would have a stain on it and you're just trying to replace something real quick and you'd be willing to spend $8 on it if you could get it right now. It could be the last Coach handbag that was normally $330 or something, and now it's out of stock, but you would be willing to spend like $400 if you could get it right now. So y'all understand that. That's why people buy and resell stuff. Duh. Something comes out People buy it all up, and then they go and they resell it because people still what? They still want it. They still have a demand for it. So what I'm trying to get you to understand is that supply and demand lives in people. It doesn't live in price action. It doesn't in the way that y'all market structure. It doesn't like live like it's price action doesn't live in a high and in a low and in a, just like those things. Those things explain the path of supply and demand, but that's not where it lives. So, real quick, let's go to a chart just to try to segue this first point to trading. Okay. Supply and demand does not live, it doesn't live in, what am I trying to say? Help me, Jesus, please. Okay. It doesn't live in vocabulary language. It doesn't live in language such as highs and lows, or no, that's okay. Hold on. Let me try to be, hold on, because I don't have this perspective. Let me try to put myself in the mindset of someone who doesn't know what they're doing. Okay, not that they don't know what they're doing, we just don't know this. Supply and demand does not live in words such as like support and resistance, I guess, and highs and lows and it does live in market structure, but I'm trying to make a point. It's different. It doesn't live in like, oh, price. It doesn't live in this. It doesn't live there. These things explain it, but it doesn't live here. It doesn't live in head and shoulders. Okay. It doesn't live in chart pattern. It doesn't live in like trend, like it doesn't live in this type of vocabulary is what I'm trying to say. Okay. So because what this does, all this does is explain the what we're looking at. This is all trying to talk about one thing called price. Okay. What I'm trying to get you to focus on is when I say supply and demand doesn't live there, it lives in people. Because I just explained to you how you can literally engage in supply and demand at the supermarket. This is just a market, the market for gold. But so what I'm saying is that it lives in people. So you go from talking about things such as this to explain price, because this is the what. Now you have to go over here and explain the why. Price doesn't move. Here, hold on. Hear me out real quick. I gotta like make sure I'm looking at me, look at y'all. Okay, hold on. Price does not go up or down if people don't press buy and sell. If nobody pressed a button, price would not move. The only thing moving price are people or algorithms, bots, whatever. But people, whatever it is, making a decision to buy or sell something. That's why price moves. So when we get fixated on analyzing price and price action, price over the course of a period of time, you're only getting one perspective of everything that has to be offered on a chart. And yes, you can go a long way. But you know what people tell me all the time? They be like, "Oh, you know what, Romel? Like ICC or price action, all that kind of stuff, the concepts were easy to understand. Like I know what happened, but you told me why it happened. And when you told me why it happened, now I started to make sense of what I'm looking at. I'm starting to make sense of like why what is happening is happening. So what I'm saying is that we need to focus more on people, okay? Because the people tell us why price is doing what is doing. You can get along, you can go far examining price, but without understanding the sentiment, let me go ahead and put that word in parentheses. It's kind of like a lost word that people don't really hear anymore. It was one of the first words I ever learned. Sentiment. For example, I think actually, hold on. Don't they have, I know they do. How do I find it? Metrics, technicals. This stuff. This is sentiment. Y'all see this? Y'all see how you got people who are like strong sell, strong buy. People might want to buy a little bit, people might want to buy a lot of it. Or people are neutral. They don't really know if it's going to buy or sell. You got half of the people buying it, half of the people selling it. Okay? Sentiment. I don't know how many of you guys have ever seen something like this. Maybe you have, but didn't really think much of it. But when I started learning how to trade, this is what I can honestly say my first mentor, my first two mentors, 10 years ago. For the first 2 years, this is what they were teaching me. And I was profitable. I was a profitable trader my first year and a half into trading, but then I started learning too much. I started learning too many other things. Fucked me up. But market sentiment. We need to understand how many people, or not how many people, but we need to understand like if people are trying to buy or if people are trying to sell. That's what we need to know. Because this is literally what dictates. Hold on, I don't want to lose what I wrote. Dang, hold on. It took me to a new. Dang, bro. I hate trading view. Okay, no, here's my stuff. Okay, hold on. What am I trying to do? Metrics. Okay, let me just do it on a different chart because I don't want to lose what I what I wrote. And sometimes I don't be understanding how to. All right, that's what I'm trying to say. We need to we need to take this data or this whatever, and we need to compare it to what's happening on the chart. We need to know the sentiment of the market. Okay, it's another form of analysis. Yeah. So exactly, this is technical, right? Like this is technical analysis. Everything that I'm about to do today is going to be sentimental or yes, sentimental analysis, right? And then you have people like my buddy Wayne here. Is he here? Wayne. I haven't talked to you in a minute. But Wayne, last I checked, he loves he loves fundamental analysis, real world news, stuff like this. I don't know, latest tariff news, what the real world has to say about, or like we'll do like latest economic news updates or something like that. And you go find a blog or a news blog. He likes this stuff. This stuff does impact the market. Okay, we know that. That nigga Trump say something, the market going boom. China say something, the market going wow. It's gonna go crazy. So he trades based off what's happening in the real world. I'm pretty sure that Wayne is sitting, correct me if I'm wrong, but I would imagine you're sitting pretty nice because you were one of the ones a long time ago. You were saying gold is mooning, gold is mooning, gold is mooning because of all the tariff stuff and because of all the economic stuff that you knew. Like, and that was so, so I'm hoping that you holding gold from like, you know what I'm saying? Like 2000 something, you know? But now, I think, things could change or I don't know. We'll see. We just had a big drop. Who knows? I don't know what's going on in the world like he does. But what I'm saying is there are pillars. These are all pillars of analysis. Okay? Everybody stays stuck at technicals. People don't even really know how to make sense of fundamentals, and I'm one of them. Let me be the first to say, I do not know how to trade news. And on top, it's quite embarrassing. I studied economics in college. I understand in a lofty way, like how if this happens, that affects this and that causes this to go up or down in value and whatever. But I suck at trading news. So but I can't stay stuck at just only price action. So then what is the last thing that I can actually trade? Market sentiment. News is not coming out every single day. News, I think, impacts the market in a much more long-term way. But on a day-to-day basis, this right here can be my bread and butter. Market sentiment. Where are the people? So, let me go ahead and just try to continue let me try to pick up where I kind of went on a tangent, even though I'm not on a tangent. So, what type of words do we use to explain people now? We use words such as orders or phrases such as order flow, volume, okay? The extent that people balanced and balanced market or whatever, like balance, like the market's balanced, or we could say imbalanced, the market is imbalanced, right? This now, so now what is ICT? ICT created hella like vocabulary words that try to get people to bridge price action with sentimental analysis. So now you get to this area right here, and he's talking about stuff such as FVG, which is what? Fair value gap. Fair. Like, look at the word choice, right? Fair, value, gap. Dissect, like, what do all these words mean? Value, fairness. So then guess what? If there's a such thing as a fair value gap, then there's something also called an FVA. A lot of people don't spend time talking about this, but it exists. It's called a fair value area. Okay? Like so people will be like, "Oh, it's just vocabulary words to get you to make trading more complicated than it needs to be." No, it's vocabulary words to try to get people to try to do a type of analysis that's necessary, which is sentimental analysis. So That's the thing. So Zayd in the group, he just said, but if there's fair areas, there has to be unfair areas. So think about it. That's what this is. By saying there is a fair value gap, this is saying that let's just reverse it. There is a gap in fair value, meaning that this is the unfair area, okay? And then if this right here is the fair value area, that means that this is the area of fairness, which is like, that would be what we would call an area of balance. That would be an order block, right? Or whatever the case is. That would be consolidation. These are all just vocabulary words that mean the same thing. That would be a range, or arranging market, right? All of that stuff means the same thing. Okay? So it's just like and this is the imbalance, right? There's an imbalance. So now let's go directly back to this picture. Keep this stuff in mind. Fair value gap, or a gap in fair value, or AKA an unfair area, an imbalance, a unfair circumstance. And then a fair value area, or an area of fairness. Everything is balanced. There's consolidation. Every buyers and sellers are happy. Why? Because they both can engage. So now check this out. I'm gonna go right back to this empty shelf. Check this out. Where the shelves are empty, that is the gap. That is the fair value gap. That is the imbalance. This is a unfair market condition. I am showing up to the grocery store as a buyer, and there's nothing on the shelf available for me to buy because of whatever reason. The reason could be news. The reason could be a shortage. The reason could be anything. I don't care. The point is I showed up and there's nothing there because buyers already came and took it off the shelf. And there's not enough being put back on there. And this just created what? A very unfair, imbalanced market dynamic for me. Because I wanted to buy, but there's nothing, the distributors, the brands, they're not putting anything up here to be sold for whatever reason. It could be that buyers bought more than what they had. It could be because there's a shortage. There could have been a recall because maybe there was like a salmonella or E. coli outbreak or something. I don't care what the reason is. That's why I don't care about fundamental analysis. I'm not saying it's not important, because it's literally dictating the market conditions. It is important. But from my perspective, as long as I know, hey, this is an unfair circumstance, I have just identified a gap in the market. Whereas the other side of the screen, everything over here, this is balanced. The market is balanced. There is supply available to meet my demand. Okay? There's enough butter and margarine and vegetable oil products to meet my demand. Okay? Meaning that there is a healthy balance between buyers who want to come buy, like me, and supply. There's a healthy balance of supply and demand. So now let's talk about what my vocabulary definitions are, how I try to simplify this concept on a chart. What I say is that a area of balance is wherever buyers and sellers are. So check this out. Buyers, which is me, pretend like you're looking at this picture, right? Here, let me hold on, because I'm really trying to drive this home. Like, I want people to not just be staring at a picture, but stare at me too. Like really trying to paint this picture. Okay. What am I doing? So, bro, close. All right. So over here, sellers are present. Who are the sellers? The companies. And now I show up to the grocery store and I'm trying to buy something. I'm the buyer. So between the sellers on the shelf and the buyers in the market, aka me, aka you, whoever goes to the store, the market is balanced because both buyers and sellers are present. The definition of an imbalance is an area where there is only buyers and or only sellers present. So in this scenario, when I show up to this physical location called the present moment in time, hear me, because I'm about to draw all this shit together. Thank you, God. Thank you. I'm about to draw all this together. When I show up to the grocery store, I'm showing up today. I'm showing up like right now. I'm showing up in this particular moment in time. Not in the past, not in the future. I'm showing up right now. Track with me on that. And just put a pin in that. I'm showing up right now, and the only thing that's available, or the only thing present, is Romel, who's trying to buy something. There's no sellers. They're gone. Like, everything there is gone. So now the market is imbalanced. This is a unfair market dynamic. And I peeped what a person said in a comment. Let me scroll up and give credit. Where is it at? Zayd, you're thinking, dude. He was like, the shelves eventually have to get restocked. They can't stay empty forever. So now what happens? Everybody who was coming, trying to figure out, like, yo, I want that, but it's not there. And they're going to come back tomorrow or in a couple days to see if it's there. And whenever it finally is, guess what they're going to do? They're going to buy the hell out of it. Why? Because they already wanted to buy it in the past. They're going to buy it. Why? Because they can clearly see, there must be something going on in the world that's causing this particular item to go off the shelves or to not be stocked or whatever the case is. So the next time I see it, the next time price is here, now on a chart, whatever, like the next time I go back to the store, I'm going to buy it. Point blank, period. Does that mean it's when you go back and buy it, it's always going to be in shortage? No. But as a consumer, as a human being, as a person, you're going to go back and buy it just for the sake of buying it because you wanted it before. You see other people want it. And now if you see it again, you'd be like, oh, first thought that's going to pop into mind. Dang, the last time I was here, this wasn't here. It might be a good idea to let me go ahead and snag some of that just in case. You already do this naturally. No one has to tell you to do this. You're already engaging in supply and demand behavior. So now let's go back to a chart. I'm going to go to the chart. Hold on. Because I want y'all to still look at me because I'm beautiful. Okay? But so I'm going to go back to the chart. We're going to do it like this. Bro, this is really good, dude. Okay? I hope that it's sinking in somewhere for somebody. What am I doing? I just want to put everything up on one screen. I want my beautiful face on the screen. I want the empty shelf on the screen too. Like, I want everything up at one time. That's what I'm trying to say. Okay, I know how to do it. I can just copy this. I can go over here. I can paste it here. Cool. And then I think it doesn't matter. Y'all don't need to see me. I'm not the most important thing here. All right. So look. Let's go ahead and figure out where there are only buyers or only sellers, okay? So let's just kind of, I'm gonna take you on like a more, what time frame do I want to put you on? Okay, bet. This is really good. This is good enough. Okay? This is good enough. Let me change my crosshair. Make it darker so everyone can see it. I'm just gonna like, I want this to be a good video. Oh, this is what I need to do. Put that up. There we go. All right. Can everybody see my crosshair? Do I need to make it thicker? Are we good? Like, I don't know. Let's make it thicker. There's no way you can mistake that. Like, all right. So let's tie it together now. How does Romel trade? I try to find where buyers and sellers are by thinking not like this, but like this, okay? And so when I come into this chart, I'm like, bet. First things first, we all need a break of structure. We all need an indication before we can do any of this analysis, okay? An indication is the literal thing, or a break of structure. It's the literal thing that shows that there's an imbalance in the market. I don't know how else to explain that. Until we have a break of a high or a low in some way, shape, or form, on a large scale or on a small scale, there's nothing to really trade. So that's why everybody says wait for the impulse, wait for the indication. I wholeheartedly agree with that. But now the point is what is an indication to you? So now here's where I come into play. An indication is a break of a high or a low. Yes or no. That's all it is. Okay? That's all it is. It's a break of a high or a low. So let's tie it together. Price is breaking a low of the range of market structure here, sure. But now price is also breaking the highs of market structure here. This is a larger example. This is a smaller example. This is a high of market structure. It doesn't feel like it though, does it? But now check this out. Price basically came down here, went up to here, made a high, higher low, then broke that high. Now all of a sudden I've just turned this into market structure. You want to know why? Because it is. It's just on a small scale. That's all it is. But it's still market structure. But now if I go up to a higher time frame, it doesn't look like market structure. But there's still structure. So price is engaging in this indication, correction, breakout, retest dynamic all the time on all scales, large and small. But so, point is, we just broke all this area. There's clearly only sellers between here and here. What am I trying to do? Bearish range. Between this section of time, right? I'm breaking my stuff up by time. There's only sellers here. What is that reminiscent of? Let's just say if this was inverted, it would be like, okay, there's only buyers here. So now you're starting to realize it doesn't matter if we're going up or down, the dynamic is the same. If I inverted my chart and said, yo, we're going up, yo, there's only buyers here. Okay, if I put it back, there's only sellers here. The point is that the market is one-sided. Only one of us is showing up. Here, there's only, in this example of the picture, I'm showing up as a buyer and there's nothing to buy. This would be an example of, say, a supermarket or like a store that shut down. You know what I mean? Maybe like Party City, or stores that go bankrupt. Sears, if you guys remember Sears. Or just stores that, yo, there's a bunch of stuff to sell, but don't nobody go. So then what happens? The store goes bankrupt, the store closes down. It's, you know what I'm saying? It's like that furniture store on the corner that has been going out of business for 20 years, but for some reason, and they're always having a liquidation sale, but they never, you know what I'm saying? It's like that. But point is the market is one-sided, okay? Y'all following me? Y'all get what I'm saying with that? The market is one-sided. Now, visually speaking, how do we perceive that on the chart? We perceive that because there's only red candles. It's not that hard. Red, 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 red. Supply is high, sure. Or you could also say demand decreased. And because I don't like to try to analyze supply, because in order to do that, I would actually need to somehow know exactly how much gold is available to be bought or sold, and there's no way for me to do that. So what I do instead is I simply analyze demand and demand only, and I say if demand increased, it goes up like this. That would be an increase in demand. If demand decreases, then the demand for gold decreased, and I just keep it at that simple. If demand decreases and people don't want something, it drops in value. If demand increases and people want it, it increases in value. It's simple. I really can't even say I'm a supply and demand trader. I'm really just analyzing demand at the end of the day. So now there's only red candles. So now guess what's going to happen? I'm going to expect sellers, since sellers exist here, the next time current price goes up to about 50% or higher of this range, I'm going to anticipate sellers to respond. In other words, I'm going to anticipate them to try to get into the market again. So what happens is they do that. Now, I wouldn't have drawn this out this way because this is a wick down here. This is the best way to have this drawn because this is pure selling. This is both sellers and buyers. You see what I'm talking about now? Look, guys, so look. The definition of an imbalance or just an area of sellers is where there's only sellers. So we have, hold on, I'm just gonna tie this together real quick, but let me move this up. We have seller after seller after seller after seller after seller after seller after seller. This candle has sellers on it, but it also has buyers on it. That's the only way to make the wick, meaning that this is actually an area of balance, and it's marked out beautifully in a wick. If I can extend what I'm trying to do here, okay, let's just make it, I don't know, doesn't really matter, purple or something. This is an area where there's both sellers and buyers, so then therefore this is where there's truly only sellers in the market. So that's why I drew my fib differently. So ABS, if you're here, this is an example of how to creatively start drawing your fibs a little different. It's all based on what you want to perceive. If I was tracking out market structure, then sure, I draw the whole thing. But now I'm tracking buyers and sellers. So if I know this is where they overlap, and I only want to analyze where they are specifically, then I can draw my fib a little different. Does that make sense? Anyway, so the point is once we get to 50% or higher, I have to expect sellers to sell. Why 50%? Because let's just say you have something for sale, you want to try to get the highest price you can get for it, right? This dynamic is easier explained the other way around. Okay, imagine it's this way. This is showing an increase in demand and you want to buy it. So this is like, yo, my shelf is empty right now. Like my there's hella buyers. So the next time that I come back to the grocery store, the next time price comes back to this area, I'm going to anticipate, like just like how I'm gonna buy it just because it's nice to have, they're gonna buy it just because it's nice to have. Okay? And it's the first time. So then what happens? It does. But now check this out. And I can invert it. But whatever. It came back into an area where now there's only let me invert it back so I don't get confused. I hope you guys are picking up what I'm putting down. The first time we came back into this area, we expected sellers to sell. Cool, and they did. But now we just created this area where there's only buyers. So when we come back to what? 50% again, that's what that dotted black line is. We're going to expect them to be like, oh, let me react and buy it. And then guess what? We go all the way up to where sellers broke a support, and now there's only sellers specifically in the market, basically right here. So we expect price to have a reaction. Do we expect it to sell forever? No, we're just going to make it react. And where do we get out? If this is an entry condition, we get out where we get another entry condition, because there's buyers literally living right here. Because at a point in time, this was an area that was imbalanced. It's a smaller area. So price comes back and it buys where it bought. And then so on and so forth. Now this is small examples, but we're about to work our way up to like larger examples. So let me just kind of like play this out. So last night, this is the price action that we were looking at last night, and we was trading this. It was very simple. Okay, let me explain it. So, all right. All right. The reason why, if you guys have seen some of my videos, you'll see me drawing a bunch of red and green boxes is because I've been trying to get you to visualize this. If I was to mark out price action, let's go ahead and tie this all together. We're gonna tie regular basic price action from an ICC perspective, and we're gonna tie that with sentiment, market sentiment right now, okay? So if I'm looking at this and I mark out my price action, in which a lot of people still do incorrectly, but let's just say price was coming down from up here somewhere and it stopped here. Cool. Price went up to here. I need to get by a new mouse. Price went up to here. Then it came down to here. Then it went up to here. Then it came down to here. All I'm concerned about is the overall like trend that happened. So I'm blocking out some noise, because what's the point of me marking this out? What's the point of me saying price went from this low up to this high to make a higher low just to go up to this high? That's redundant now. So I'm actually simplifying it, but you have to like know how to perceive it, okay? Instead of marking out this low didn't do anything significant. It didn't break this low. We didn't change the trend in a general sense. All we did was we just went up, came down, made a higher low just to get to this area, so I can mark it out that way, okay? And then after that, the market came down from these areas, went sideways. This is noise. All this is noise, and it just ultimately came down. All of this, okay? And now I could mark out all of this little price action, but guess what? It's just an uptrend. We made a high and a higher low, and then we broke this high, and this particular purple line at the bottom was the start of this whole uptrend. Yes or no? Because does everyone see that? If you don't, I'll draw it real quick. Price was down here, we went up there to make a high, then we came down to make a higher low, and then when price closed right there, that was the beginning of our uptrend. In other words, this is where, hold on, just give me a second because I'm being OCD about this. All right, I forgot the wick is down here. All right, okay, in other words, this is the price action, okay? That's what Sai's teaching y'all. That's the price action. This is the highs and the lows, the market structure, the breakout, the breakup structure, the indication, whatever it is, the lower high here, but price made a higher low, then it indicated, broke it, it made a higher high, and then cool. That's price action. Now, check this out. Did price give us a correction at this level? Let's zoom in. Or did price just go up and keep going up? Y'all tell me. Did we get a correction here? Someone said yes. Someone said partial. Okay. Let's talk about this. Okay. The correct answer is no. Okay, you said we got a correction after price went into the fair value gap. Okay. So look, Eric, boom, bingo. It never came back below the level. That is what I want you to talk about because I'm being very literal with my word. Um, it didn't have a. I don't know why you just sent a crypto code. I don't know if you meant to do that, Wayne, or unless that's a joke. But anyway, so sorry, it had. I don't know. Break a structure. I'm gonna. Okay. I highly recommend because that's going to be in the video. I highly recommend if that's like a crypto code or anything like that, that's important that you change wallet addresses or something. I don't want that to be, I don't know what that was. But anyway, so um so everyone, yes, it did not come back and correct at this price at that purple line. We created an indication, a break of structure to the upside, which shows a increase in demand, and the fact that we didn't get a correction shows that the demand was so strong that buyers wanted to buy at an even higher price, which they're not supposed to do. Hear me out. Buy low, sell high, fam. So it buyers are buying at a higher price. If that happens when and they're supposed to be buying low, it's literally showing you that demand is increasing. It's showing you that the whole reason why the market provides us higher lows, aka a higher price floor, if you've heard that before, is to show that the demand is upward. It's bullish. That the market sentiment, like that's where this stuff comes in, that the market sentiment is supposed to answer this question. Is it bullish or bearish? And this is so important because this is the only question we really need to ask. Or not the only, but the main question. The first question. Because guess what? What price you get in at doesn't matter if you don't know if you need to sell it or buy it. You got to know this first before you can even think about what price you need to buy or sell at. A lot of people have taken the opposite approach to this. They come into ICC, they see what to do, and they literally know exactly where they're supposed to buy. They know the what. But the thing is they don't know, they know where to buy, the price level, but they don't know if the market is actually bullish or bearish at that time, is what I'm trying to get at. So anyway, let's just keep tying this stuff together. So we have an indication which shows us that the demand is increasing. If you watch Sai's video, he knows supply and demand inside, like internally. Sometimes it's hard to articulate something that we already perceive because we've been trading for so long. But when you listen to his videos, he says this verbatim. He says what? Oh, since price broke this high, all of the sellers at this level are taken out of the market. He's already, like, he knows what he's doing. He's trying to tell y'all to it, but because it doesn't click, y'all don't understand it. But he's literally telling y'all exactly what I'm telling you. I'm just going in way more detail than he does and needs to do. But I'm doing this because some of us, like me, are complicated people, or we overcomplicate things, or we're very technical. But I'm drawing it all together. So now, price creating a higher high like this, once again, is showing that demand is increasing. That's the whole point of why we have to track our uptrends. Higher highs and higher lows, lower lows and lower highs. If we see lower lows and lower highs, it means that demand is decreasing. Sellers are selling at lower prices. That's not what they're supposed to do ideally. So it must mean that there's not there's a reason there's a reason we're doing so. Sentiment is bearish, and we need to go back down until we get low enough for for sellers to stop selling and for buyers to start buying. Oh, prices making higher highs and higher lows. There must be a reason for it. There must be a reason that demand, that people are buying at such higher prices, or whatever the case is. Okay? So, damn. I feel myself getting sidetracked just because I'm excited and I'm really hoping that this hits. And I'm like I'm not even talking about the point that I'm trying to talk about. So let me just kind of like backtrack a little bit. Okay? All right. Price didn't break this high. No, sorry. Shit. Price broke this high and it didn't correct at this level. If ICC is true, we need to correct. Okay? Put some weight on this particular level because this is the high that was broken that started this entire uptrend, that gave us a bullish indication on a larger scale, not on a higher time frame. For you time frame fanatics that be like, yo, what time frame do I use? I didn't switch time frames yet. All I did was I went from here and I scrolled out and I went to here. It's the same time frame, but now I'm just analyzing a larger scale. That's it. I could zoom out and stay on this time frame and analyze another larger scale if I wanted to. We have an indication to the downside. Doesn't price have to go back up to correct this anyway? Oh, wait a second. I can't see what I need to see. Okay, then let me go to a higher time frame. Oh, now here's a larger scale. All I did was I went up to the 15-minute chart. I didn't go up to the 1 hour. I could. But now guess what? I have indications above here, so the market needs to correct here. But I also have indications below here, and the market needs to correct here. So now guess what? Buyers and sellers are on the same page. Think about it. Think about it from the perspective of order flow. Okay, so let's talk about, because when I say buyers and sellers on the same page, I mean that. Those are people. I didn't say price. So think about this. We literally need, buyers know that the market needs to go up because we're in an area that makes sense to buy. which means we're in the lower side of the range of this whole entire push to the upside. This whole uptrend right here. Bullish. Boom. We are now well below 50% of it. We could eyeball that. And we are back below the area that sellers had in control. How do we know they had it in control? Because they took the market down. Duh. This stuff starts to get very caveman-like. It's very simple. They were in control here. Sai would say this is an indication. Sai would say the sellers that were in control are no longer in the market. Sai would say, now that the market has come down and give us a correction, should we be looking for sells? Absolutely not. Sai would say, we need to wait for this correction phase to be over so we could buy it. All that I'm saying is that that's just this range. I could also zoom in a little bit, and now I could start talking about this. Buyers had this area in control. And sellers took control. This is what? This is a red candle breaking below a green candle. This is the range of the downtrend breaking below the range of an uptrend. This is the lowest low. Objectively speaking, we downtrended, we uptrended, then we downtrended again. But guess what? All of this is existing inside a bigger range right here. So now, when I start saying internal and external structure, okay, man, I'm getting so sidetracked, but let's just keep going. Point is, if this is what I'm choosing to look at, you have a choice to pick whatever range you want to trade. You don't have to trade a certain scale, large or small. You pick. All you need for the range to be relevant is a break of structure. You need an indication. It could be on this scale. It could be on this scale. It could be on, I did not mean to do that. It could be on a little tiny scale. It could be on this scale right here. Because it's happening all the time. V-shape, sure, if you want to think about it that way. But whatever. But like the point is like you need a range broken before you do anything. You need an indication. It's just that now every indication needs to be valid. And I'm going to talk about that later. Well, no, I'm going to talk about it right now. Every single thing that I've marked out is the high or a low of a trend that was either very, very, very short and fast, or on a medium scale, or on a larger scale. But they are all trends in of their own. They are all trends in their own right. This is a whole trend. But this is also a trend as well. Okay? But so if I'm looking at it like this, I could say, bet the low of this downtrend and the low of this uptrend just got broken. And this is what I be calling external market structure. I tell people, only mark the highs and the lows of your trends. I don't care what scale you do it, but if you only mark those levels, you will mark all the correct levels that you could potentially ICC trade. Okay? I'm not marking out this. It's a key little level, but that's not the same. Okay? You have to understand why you're marking stuff out. Anyway, point is, so, but now all of a sudden, this is external market structure. This is my highest high of my trend. This is my lowest low. But now, just because I did this and I see a bigger range, now this is no longer external, because this low in all of this price action is quite literally inside the range of a larger trend. Do y'all get me? So when I say that every indication that you're trading, every trend that you're trading is nothing more than a correction phase of a bigger trend that you are not seeing. You need me to repeat it? Okay, bet. Price made an indication to the downside because it broke the lowest low of this trend, and we need a correction eventually, right? But guess what? This indication was nothing more than a correction of a bigger trend that kind of went unnoticed. That's it. So, and so it's happening over and over. Watch this. So now this is when we could start. This is how we start to get to the ability. This is how we start developing the ability to forecast where the market needs to go. Watch this. We know that the market needs to go up in a major way, because it does. But we know that the market, once it goes up, it's going to want to come down. But we also know that it needs to come down to go up. Y'all following me? Because we broke this high and we don't have a valid correction, and we need that to happen to support this bigger narrative. But then we need this to happen to maybe support price needing to come a little lower, because we don't know if this downtrend is over, but we know, like, once we go up there somewhere, we don't know how high, but price is going to want to try to come back down. It is what it is. Okay, so let me try to bridge these gaps now. Let's go, because we were on the 5-minute chart when we started this, and now I'm looking at a very small level. Like I said, this is the range of the highs and lows that led to this particular uptrend that broke this bearish range. This is where the party started. Okay? This is my area of balance, because there's buyers and sellers here. I know that the market is not balanced at the purple line because we broke this high and we never gave a correction. So now watch how this little tiny interaction is going to play out. I just took it from a large scale all the way down to the small scale. Because guess what? These big red and green boxes is exactly the same thing as these red and green boxes right here called candles. No different. Just watch this. What I wanted you to see was that interaction. Last night, I was telling them, hey guys, I think the market is going to sell. We were up here. Why did I say, hey guys, I think the market is going to sell? For multiple reasons. One of those reasons was like, well, we just made an indication. So what am I going to do? Based on the range that was broken, I'm going to analyze the current range and figure out what led to us going from bearish to bullish. And that was this area here. Price could have kept selling, but it didn't. Instead, price started a whole uptrend and it never ended and it broke. So this is where the party got started. Secondly, I knew we didn't have a correction because we came down into this gap only one time. So now for those of you who know about the liquidity double sweep model, there it is. I have my gap. Let me delete this. I have my gap. That's green right here. This is only one raid inside the gap. How many do I need? I need 2. But I need the second raid to go below the first one. That's the point. So for those of you who know that, there it is. R1 and R2. Here's R2. Sometimes it happens in the moment, sometimes it happens later, but here's R2. Now, let's just say, okay, let's forget that perspective and let's go back to ICC. There's the correction right there. So now when people see me on a 15-second chart and I'm trying to get in here and figure out, I'm trying to find that level or something, it's because I've zoomed in with such a level of precision that I can be on a low time frame like this. But anyway, going back to why I was saying that it was going to sell, these are just reasons. Now, what was my reason in the moment to let me know it was time to sell? There's sellers here. So when we went into that candle or into that range for the second time or whatever, we went into this area, I don't really care. You know, like, I don't really care about the fact that we went up only once. I knew that this was going to pull price down, and all I care about is entering because there's sellers here. And then I can enter, I can wait. I kid you not. And actually, hold on, just for proof, let me go get my phone. I have a screenshot of my entry. Hold on. And I'm about to send it to the chat. So this is why, like, everything that we did last night, it was really hitting for the guy that I was teaching, which a lot of us know. But anyway, I'm on my phone and I'm going to the Discord, to the chat, right? And I'm going to send my entry. All right. It is from last night, right here. There's that one and that one. So this price level on a 15-second chart was 41.48. In order to find that, I got to actually go to the futures data because the stuff is different. So we'll go to GC and we'll go look for 41.48. 41.48 is right here. So I entered here, basically in this area. But on a 15-second chart, here's why I said it was going to sell. On the higher time frame, we already made a lower high. This is the lower high. And my higher time frame is a 5-minute chart. I was down on a 15-second chart trying to see if it was going to follow through. On a 15-second chart, the trend was already bearish. Look at that. High, low, lower high, lower low. Then what did I do? The same analysis that I've already been showing you. I analyzed my supply and my demand and my ranges. So this is what I drew. I said, this is my bullish range where there are buyers. We understand that. This is my indication. This is my gap in market structure. But there's a little order block right here. And the point is now when you start talking about Holy Grail entry, I'm supposed to enter into my trade right in that area. Okay? But this is a imbalance. And this is why this concept starts to get hard, because just like how there's a range inside of a range inside of a range, like I've been showing, there's areas of balance inside of areas of imbalance. If I go up to, let's just say 30-second. Now it's nothing but a bunch of red candles. And if I go up to a 1-minute chart, you never saw that bullish candle anyway. It's just an area of sellers. So the point is you can either be super precise, or you could just chalk it up to say, you know what? As long as we are at 50% or higher in an area where only sellers or only buyers are in control, I should be on the right side of the market. But here's the thing, I still needed the higher overall narrative from a 5-minute chart. So here, I'm using my words so carefully, because like higher doesn't mean big. It doesn't mean 1 hour, 4 hour. It just literally means higher than my current chart. And so this is higher, and I needed this larger scale perspective, which was what? Price coming down, price being in an uptrend. Bro, come on, mouse. Price being in an uptrend, and then failing to continue, and then closing, like, or coming back down. And all I'm saying is, now that I know how to identify where sellers were, look at why we made the lower high, because there were sellers here. It's that simple. And price broke this area of market structure, or this area of balance. Why did I just mark it out like this? So now see, I don't mark out fair value gaps like ICT. ICT would have marked out from this candle. I don't do that. Why? Because I've tried to look at market structure the best I can. This is an area of balance. Why? Because there is, where? Because I just lost my chart. Where was I at? Oh, I was on this. Because 5-minute chart. What's the definition of balance? Definition of balance is wherever buyers and sellers are overlapping. These are buyers, sellers, and I'm including the wick because I've already proved that the wick is literally it's a visual representation of an area of balance. The only way for a wick to be made is because sellers were here and buyers were also here. So I'm marking out the whole thing. Boom. Okay. Now I take, so now at the bottom of that area is where my imbalance starts. That's where my gap starts. And I take it down to the first candle, the top of the candle that has the swing point on it. If you don't know what a swing point is, go watch that video. But it's just a candle where it has the wick. that is, if it's a low, is lower than the one on the left and on the right. And these are market structure. These are the lowest lows of this little tiny downtrend. This is the highest high of this overall area. And when you mark those areas out, they're always going to have that dynamic. That wick is lower than both candles around it. That wick is higher than both candles around it. This wick is lower than both candles around it. This wick is higher than both candles around it. And it never changes. So this is how you mark out your highs and your lows. It's a very easy tool to where if you don't know what high and low to mark out, follow that rule. It's going to help you a lot. So anyway, point is, now we go back up into the area where there are truly only sellers. Like, I really feel like I'm better than ICT. He marks out an FVG, I mark out a true gap. There is truly only buyers and truly only sellers right here in this area. And what do I say do? I say sell at 50%. What happens? It's right there. We sell at 50%. Somewhere close to it, get in. Okay? So, because I know this, I was in the call last night and I was telling them, oh, I think price is going to sell for this reason and for this reason. And because why? We broke, go back here, we broke a bearish range. And so there, and we need corrections here. This is where the trend started. We need price to go up. Why? Because not only do we have a bullish indication here, this bullish indication is going to help us correct this bearish indication here. And this bearish indication is going to play out, or like what I'm saying, we need price to buy because this is nothing more than a bigger correction here. Showing you that every trade you ever be taking is always a correction of a larger move that you just didn't analyze. I have a bullish indication, so I could correct a bearish indication. But now I have a bearish indication, so I could correct the bullish indication. And you see how the market folds in on itself? Like it just keeps, it keeps folding in on itself over and over and over. It keeps oscillating between like, oh, like it becomes a little overwhelming, but once you see it, you won't unsee it. Every indication is always trying to show you a bigger market correction. All you have to do is go in and identify a range that was broken and then trade that range. And that range is up to you. It could be on a large scale. It could be on a medium. Look, so it can be on a large scale. It could be on a medium scale. It could be on a small scale, which that's what this one is, right? This is a small scale. This is honestly a rather small scale. This scale is so small that people would say, don't trade that. But then I'm going down even smaller. I'm going down even smaller. And I'm looking at this scale. And then I'm looking at this scale. We have a high that was broken. These highs, or whatever the case is, on GC, on gold, they look a little different. So here, if I were to mark it out like this, you see, it looks like it retested, which it did. But now if I go to gold, it doesn't look like that on Forex. So that's why I kind of do a cross comparison of these two. You see that same high was broken, but now it's not retested. Happens. But the point is though, regardless, what do we know? we only came down into the area of where buyers live once. So if I was marking out my market structure, this is how I would do it. This would be my area of imbalance, my AKA my gap. Why? Because I see this. This is what I'm looking at. I'm being very, price went up to here. Because this is a swing point. So, and then it went up to there. And then down here. Okay? This is what I see. I don't care that it's a 1 minute candle. This is still a swing high. It's just on a super small scale, but the high is higher than this and this. So this is the area of market structure that we just broke. That's why I don't draw my gaps like ICT does from here to there. I start wherever I can identify a structure, which is it's always going to be a swing point. Then we went all the way up. Now this, sometimes I flex on this because I'm on a low time frame. I decided to put it here because this is the low, but it really doesn't matter. I could have put it up. I could have put this area up here. Bro, please, mouse. Like, I'm gonna throw this thing across the room. I could have put it up here to the bottom of the candle that made the first swing point. That's still okay, but why did I choose not to do so? Why do you guys think? Am I putting more weight on price action, or am I putting more weight on people in order flow? Why would I not decide to draw it here? Because now I have to mark out my area of balance. I know that it starts up here. Exactly, perfect, you said it. The wick is the area of balance. So let me just go ahead and adjust it, because what's important to me? People, because without buyers and sellers, price doesn't move. So I want this to be true, not to price, because time is fake. If I was on a 2 minute chart, okay, that's gonna change the candles. That's gonna change what I'm looking at. It's gonna change where this stuff starts and ends. It's gonna change it. So since time really doesn't matter, and the only thing that really matters to me is people, let me mark it out in a way that is true to the theory of balance and imbalance. So because this right here is still an area of balance, I'm going to mark it out like this. That's why I'm explaining that. Now, that's probably the first time probably the first time I've ever verbalized it, but I just do it because I know it. I just do it. So now, the first time we came back into this area is here. This is what I be calling the raid number 1. Everybody in their mama trades a fair value gap. They don't even know it. Well, I'm not saying, but let's say all the ICT people. We know ICT is very big. And a fair value gap is one of the first little basic concepts that people learn. So we have to understand that this is actually, see, now I'm gonna start, now I'm starting to connect the dots, but I'm using more complicated terms now. This is liquidity. Liquidity is not a price action term. It is a order flow, market sentiment. Hey, I'm trying to analyze people term. What am I trying to say? There was a lot of buyers right here. So much so that it pushed the market up and continued to pushing it up. But guess what? It left a gap between the highs. I don't know how to explain. The point is that it's just a liquidity. So it has to get swept. The market is trying to make people lose money. It's not trying to make people money. It's trying to make them lose their money. So everybody who entered here just off on a whim, and they entered in the first time, they need to get swept. What I say is that they need to come down to 50% or lower, and that's where you buy it at. This is why this is one of my most favorite models to trade. In the notes, in the VIP notes, they have so much value. But let me scroll up. The model for this is all the way up here. You get a gap in market structure. You wait for the first rejection or the first raid. But what do we know? Let's think about this. Yes or no, guys? If this is my true gap, and this is where buyers are, and buyers are supposed to buy at a low price, and 50% is the universal populist idea of what a sell is. Oh, it's half off, 50% off. And we aren't even in the lower side. We didn't even hit the middle yet. We didn't even hit the middle or the lower side of this gap. Is the market done with its cycle in this area, or does it have to come back here before anything else major happens? That's the point. When the market creates this dynamic, that is an incomplete range. I learned this from my friend Tyrell. Is he here? No, he's not here. But in the group, Tyrell. I learned it from Tyrell. This is his main strat. The strat is so much his strat. I think he's charged people like 15 bands to teach this, because he knows what he knows, and he knows that if he charges someone 15 bands, they will make 150. Okay, here it is for free. Look, so the cycle of price action, the cycle is not complete here, because we didn't tap even the middle of this true gap, let alone come down to the lower side of it. Until here. And the point is like, okay, we didn't hit 50, but what did we do? We did exactly what needed to be done. And we rated that liquidity level. When you see this happen so often, you're going to be able to put weight on it, and it's going to feel like an unconfirmed entry. This is not beginner friendly, not because it's hard. It's not beginner friendly because it's a little, in my opinion, it's a little scary. It's a little scary to just go ahead and enter, and all I see is red, 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 red. Okay? But now, let's think about everything that I said. Let's go back to the grocery store example. When you show up at current time is current price. When you show up and you see the shelf is empty, you like, damn. No, sorry, no. When you show up, and this is what you saw before, which was the imbalance, as the market conditions were unfair. You show up as a buyer and there's nothing for you to buy, so you know, damn, the next time I go to the market, if I see that, I'm going to get it just because I know other people are buying it, or just because I know it's nice to have. I wanted it when it wasn't there. I'm going to definitely snag some the next time I see it. Okay. You wanted some of this buy. You wanted to make some of this money. You was waiting for the correction. You was waiting, but it went on without you. You like, damn. Well, the next time I'm at this price, oh, I'm going to go ahead and snag some up. It's the same thing. It's the same thing. You already do this in real life. This is it happening on the chart. You snagging up something. And so now here's where the confidence in being able to enter into the market like this, here's where it comes from. It's not coming from the idea that you need a confirmed trade, you need to wait for a candle to close. Because guess what? Every time I press buy and sell, think about this. My buy is being placed at the current open price. If this candle was in theory open right now, and I were to place buy, even if it closed, or whatever the case is, I'm actually not even placing my trade at the close of that candle. You can never go back in the past. You're always placing buy and sell at whatever the current open price is on whatever current candle it's on. Always. So waiting for a candle to close, that has its place. Okay, I'm not gonna say that doesn't, but I'm saying the confidence comes from knowing that what you're entering in already happened before. Kind of sounds like ICC. The reason why we take our indications and our corrections and our continuations is because of the indication, I have faith that if we do this again, we will do what we did last time. That's the whole point of it. So now, for example, you mark out this indication right here. Be like, hey, because we bought before, I have faith that when we come back down into an area where there's buyers, and we prove that we can go up, or I can see and witness that buyers are trying to buy, they're holding support, they're not making any more lower lows, and they're engulfing across this level. They're showing me demand is increasing. This is price is rejecting, showing me that demand is increasing. It doesn't want to decrease. It's showing me that people are buying. I have enough faith that whatever happened before could happen again. So we take this trade. We're taking the trade that already happened. We are taking a trade that already happened. But guess what? Are we going to be overzealous and think that price is just going to go straight up here? No. Why? Because there's a lot of sellers in the market, isn't there? Look, sellers, sellers, sellers. So you have opposition. But now what do you know? Well, hold on. I know that most likely, if this is the bottom, we might go somewhere up to around 50% before sellers kick in. Oh, there's a little gap right here. Let me go ahead and just put a little bit of weight on the fact that there are literally sellers that exist right here. This is my true area of imbalance. This is my true gap. If I marked it out like ICT, I would have marked it out like this. I would have marked it out from the candles. I didn't do that. I'm looking at the market structure. That's the low, that's the high, that's another low, that's the high. Everything I just marked out is a swing point, aka to signify a swing low and a swing high. And that is my true gap. It's somewhere around 50%. I know I have some order blocks above it, aka which is nothing more than a lower high in the market. But now this is the order block. Okay. Let's see what it looks like on a 3-minute chart. See, order block. It looks like an order block. It looks like something that a lot of people say doesn't matter anymore, right? But now clearly, if I were to scale down low enough, now all of a sudden it does matter. Why? Because it looks like market structure. Meaning that your higher time frame little order blocks, if you see an order block on a 4 hour chart, that is low time frame market structure. Anyway, y'all get it later. So where do I think price is gonna have a rejection at if I click buy right now? I'm gonna take it up to there. Am I going to try to like hold it forever? No, because price can come down lower. It could, because that's the whole point of ICC. If this was an ICC setup, bro, your stop loss got to be down here, fam. And this is why people don't like ICC as much. Cause, but the thing is, it works if you actually would just use risk management. But that's where my stop loss would have to be if I was trading the bigger range. But because people don't have that much patience or they don't have that much capital, I'm trying to show you how you can get around that. But anyway, so I'm gonna let this play out. We're gonna watch price go all the way up to here because this is what we was doing last night. So this is why Phil learned it, and why, because we was smacking this stuff live. Price goes all the way up to this area where sellers were in control. They reject off 50%, and guess what? We just made an area. Just roughly speaking, I'm eyeballing this. This is around 50% of this buy, and this is where buyers bought. Hold on. They start having a reaction, right? So now let's just go ahead and actually mark out the gap. There's the gap. I would probably mark it out like that. That would be my true gap. We come down and we don't close below the low of this range, and now buyers start to have their response. So what am I saying? Buy at 50 or lower. You have all the freedom, and I do this. You can wait until the price action starts to support a buy. Wait until we start getting higher candles. Wait until we start breaking highs before you get in. But now buyers have a reaction. But now, guess what? Sellers are literally living right here. So what's going to happen? They're going to have a response, is what I'm trying to say. And so what we do is we mark these areas out. We get up there. They have their initial response. This comes down. This is still all valid because I was trying to tell dude. Just like how, look, this is crazy. Watch this. Just like how this is the first set of highs and lows. No, here it is down here. So let me delete this so we don't get confused. I got too many boxes on my screen. Now I'm kind of talking about balances a little bit, or the bottom of an imbalance. Just like how this was where the entire uptrend confirmed. Y'all remember that? This is where this whole uptrend started. The correction phase, the downtrend ended where the last uptrend started. That's on this scale. Now, on a 1-minute chart, I could say this is my uptrend. I could say that the market kept coming down to this low, went up, made some higher lows, and pushed up higher. So now this is technically the range where this area started. And you see how it starts to play out on a small scale, on a medium scale, on a large scale, and it plays out over and over and over. So now if I go down to a 15-second chart, it's going to look really clear. Pretend it's a 1-hour chart. Pretend. Price came down and made a low. Then it went up, and it actually went like this. It went all the way up here and made that high. Then it came down and made this low. So now that I'm on a low enough time frame, I can see exactly really what happened. And this is why I scaled down, so I can get precision. It went up and made a high, higher low. When we broke that high with this 15-second candle, that was the confirmation to push up. That was the real start of this whole small uptrend, or just this bullish price leg. Now, if that's the case, mark it out. Guess where we just bottomed out at? 50%. So when I say the magic of 50%, it's not magic. It's just people. Everybody and their mama loves a good, oh, it's half off, it's 50% off. That is universally what is considered a sell. 50%. And you can smack it because you already know, based on however you want to perceive it. If you want to look at it as orders and people, or if you want to stay true to ICC and be like, and you're tracking your highs and your lows, you'd be like, well, this is where the trend started, and this is where the ICC, this is where we got the change of character and the confirmation. This is where we got this is where it happened on this level. But now in a bigger sense, the next scale has to play out. The next scale higher, and this scale is playing out, so a bigger scale can play out, and it just keeps going all the way up. So we have ICC on small scales that lead to ICC on big scales, which is why when I start to say, yo, the low time frame leads to the large time frame. If the low time frame doesn't support the high time frame, the high time frame won't play out. In order for us to get the correction that we need, because we broke this low, let's go back to this. In order for us to go up, to correct this low that we broke, we have to prove that we are capable of doing so on a small scale to support that larger move. And so while this would feel like a counter trend trade, from this perspective, now I'm trading in alignment with the trend. But then this correction needs to happen because this was nothing more, this whole indication to the downside, that was an indication which was nothing more than a larger scale correction. I was about to say time frame, but notice how I just showed you 3 different scales and ranges that you can play off of, and I'm on 1 time frame. I keep saying time frames don't matter. All it is what scale, what range are you analyzing, and then just use a time frame that helps you perceive what you need to see. Yeah, this whole thing is being recorded. Okay? So, point is, what I'm gonna do though, I'm gonna allow this to just like play, right? What was I about to do? I'm just let it play. Okay. So now price didn't go up, but it doesn't mean it's not going to. Okay. It did have a reaction, but then it came down. I was trying to tell people that price needs to buy, and they're like, nah, you're goofy if you're trying to sell it. Well, what they don't know, well, because I had a whole argument inside of Side's Discord. What they were looking at was this. They went to a higher time frame. Why? Because they thinking that that it's about the time frame. And they're looking at price like this. Oh, the only thing we've been doing is selling. So you would look real goofy trying to buy it. they didn't account for the fact that price is under sell territory, which is 50%. We would want to sell based off this range that they're talking about at 50% or higher. And when I say higher, it could be this high, it could be this high. Okay? So that's one. Two, they didn't scale out far enough to see that we actually need to be buying because we just corrected below this level. So they're in the chat telling everybody, oh, them sales ain't gonna work out. Them sales ain't gonna work out. And every single time we get a little bit of a drop, or it looks like we're about to break market structure, they're like, oh, told you that them sales ain't gonna work out. We going straight down to 39.91. You could see how passionate I am about this. I even remember the price that they called out. But now they're saying, oh, well, Wick sauce is unprofitable. And I'm like, okay, well, if you actually used a little bit of Wick sauce, you'd actually already be in this buy because price created a range and then we corrected back into the range and now we're continuing out of the range, but they don't want to call it ICC. So, but I'm like, okay, well, doesn't this make sense? Don't we need that to buy? And they're gonna be like, well, yeah. From that perspective, though, only. All right, then go ahead and be unprofitable. Like I don't know what you want from me. I'm trying to help you. You don't want to be helped, right? They're like, didn't we make an indication right here? They'd be like, yeah. Don't we need a correction? Yeah. So that's ICC, no? Well, yeah, it is. So then don't we need it to buy up? So now I'm just outwitting these guys and I'm just like talking circles around them because they just don't know what they're talking about. And if they do, they don't know the fullness of it. And that's all I'm here to just try to bring to you. And the fullness comes from knowing not just how to analyze this stuff from a perspective of like price action, but knowing how to analyze this stuff from a perspective of market sentiment. Price will tell you what? Price is technical. But if you don't understand why we even have this, and it's because of words such as orders, order flow, volume, balance or imbalance, or understanding that there is unfair market circumstances and fair market circumstances that you should already be able to understand when you go to the grocery store and you're presented with a very unfair market condition because there's nothing available for you to buy. It's imbalanced at the grocery store. Whereas on the left, you're a buyer and sellers are here. So buyers and sellers create an area of fairness, an area of balance, an area where there's both buyers, which is you looking at the picture, and sellers, which is the product on the shelf. The market is imbalanced whenever only one of y'all show up. I'm showing up as a buyer and there's nothing on the shelf for me to buy. Or there's a bunch of stuff available to be sold, aka there's a bunch of sellers present, but no demand, no buyers. So guess what? Stores go out of business. One of the two. The point is when the market is imbalanced, things change. When the market isn't balanced, no, sorry. So when the market is not balanced, things change. When the market is balanced, everything proceeds as usual. There's no shock to the market. There's nothing going on. When the market is, hold on. When the market I'm trying to find just easy examples. Let me just go back in time. I don't know, like I'm trying to just find quick, easy examples. Okay. Here. Oh, we caught this sell right here too. Wait, was it that one? No, it wasn't that one. It was this one. This was the last trade we caught that night. Because the market was imbalanced right here. And so when I showed him this, he was like, nigga, is this all you do? I said, yeah. He's like, you mean to tell me all you do is just find where sellers are and find where buyers are and you just enter like this? I said, yeah. And he said, you get how much money? Well, let's go ahead and calculate it. This is 40.88. And the first overall drop, let's just say take it down to support. Let's just say we didn't even get the whole move. Take it down to support. This is what? 40.63. That is over 200. That's 250 pips if you're trading Forex. If y'all are real traders, you know that that is a crazy game to be had in only 333, 330 in 5 minutes. 250 pips. The way you calculate that is price was at 40.88 and it went down to 40, what was that? 63. Which means that that was a $25 price difference. Multiply that times 10 will give you your pip count. If you multiply it by another 10, this gives you points in Forex. Points in Forex and points in futures, like just different. This gives you the micro pips. This number is what you multiply times your lot size. What lot size do you guys want me to multiply this by? How big is your accounts, or how many not contracts, no, how many lots, like 0.0 what, or you know what I'm saying, like how many lots are you guys trading? 0.10, that's $250. 0.03, that's $750. 0.18, cool, times 0.18, $450 price drop. 0.5 would have been that much more. 2,000, that would have been like $1,125. Right? I'm just doing this off the top of my head. I've been trading gold for 10 years, so I'll calculate this shit like easy. So do that times what? What did you say? 0.5. The math is simple, right? 0.2, that would have been I don't know, bro, but y'all get it, okay? In 5 minutes though. Okay. Stop loss. Let's go ahead and check it out. We would have entered right here at 50 or higher. We know that. Stop loss. You can do it tight, but let's just say you did it this way, right? Which I wouldn't have even done that, because that's just how I am. Like, if I'm using this area to support my sell and I know sellers are here and this is an area of balance and I'm on a 1 minute chart, there's nothing else above it. This area of balance already rejected off an old area of imbalance. There's really no reason for me to be trying to put my stop loss hella high. What am I trying to do? I'm trying to make a rectangle. There's no reason for me to be trying to put my stop loss above an area we already rejected. So even this is, yes, it's a safe stop loss and it's not super big in the grand scheme of the market move. You still got your 1 to 3, 1 to 5 risk RR. But what I'm saying is, like, I'm putting my stop loss right here, bro. I'm putting it above the candle or something like that. You know, something tight, right? So, but we did this last night and it hit because it was supposed to. I also was telling them like, yo, usually at around 3:30 a.m. my time or 6:30 a.m. on the East Coast, the market on gold, it loves to reverse like clockwork. Look at the time. It says 3:30, 3:31 a.m. And we reversed at 3:33 a.m. Am I lying? Let's go look. We go to the notes. Now I'm just flexing at this point, right? I'm flexing my knowledge. I'm flexing my experience. Look at this. Trading hotspot times. 3:30 a.m. and 4:30 a.m. my time are usually good for London reversals to set up New York. What just happened? Right? I'm giving you the blueprint. I'm giving you an easy approach, right? Anyway, point is we smack it and this is what we experience. So what was the whole point of doing this? We're going to calculate how much drawdown we would have did or how much our risk would have been. We entered there and then this is at 40.93. That's 5. So what? That would have been a 500 a 50 pip. $5 times 10 is 50 pip stop loss. That's not terrible. That's not bad at all. Times 10 would have been how many points? And let's just use that 0.18 example. I kind of like it because it was a little odd number, or not an odd number, but it was, like a quirky number, not like a pretty number. 0.18, we would have risked $90. So now, do you have an account that can afford a $100 stop loss? You got to have, at least like if you don't have much capital to give yourself some opportunity, you got to have at least $500 for that type of play, or just decrease the risk. Okay, it could have been a $5 risk if you traded 0.01. It could have just been a $5 risk if you traded 0.01 lot. Sometimes so then at that point you only needed maybe $100, $50 for this trade. $50 risking whatever to make, you know what I'm saying? You just have to do the risk management, and that's just on you. If you don't do it, you don't do it. You have to do it. But anyway, that would have been the risk, and the reward is 14 times greater than the risk. So we just called a 1 to 14. So what do? We multiply that times 14, and you would have risked $90 to make 1,260. In how long? Exactly 30 minutes from 3:33 to 4:03. But yet somebody want to be in my ear telling me that I'm catching a small move because I'm on a low time frame. Don't talk to me. You know what I'm saying? Like go study. Go back to school and pay attention. Right? This is when I'll start to get a little haughty and arrogant, because it's like I be trying to help people. And I really do be trying to help people, but then it's like in the process of trying to question me, I don't mind being questioned. They start to disrespect me. And I'm not going to be disrespected. I could just turn the other cheek, but, and I do sometimes, but lately, maybe like this past week, I haven't been doing so. Because then, if I'm wrong, I want to know if I'm wrong. Because I'm serious about my trading career. I'm serious about my journey as a trader. I'm trying to stress test ICC. That's what I did. And I stress tested so much to the point to where, oh shit, ICC and ICT are the same. And then I just added a little bit of what? Order flow? Because volume is important. If volume wasn't important, then Sai wouldn't tell you, hey guys, trade in session. Why? Because there's volume there. Why is volume important? Oh, because people move the market. But now if I say the word demand, I could say the same thing. Hey guys, trade in session, because there's more demand and more volume or more demand at those times, which present more trade opportunities, and it moves the market. I'm gonna get nailed to the cross, not by him, but just by all of the dummies that are coming into the market, and they're not being studious and patient to know what they're to learn something. These there's a lot of people who are trying to learn how to trade that were class clowns in school, so they're unteachable. But then there's a lot of people trying to learn how to trade who actually know how to study. They had tutors. They or they're smart, or you got people who were savants, which they never had to really study and they did well on the test. There's people from all different levels of competence trying to learn how to trade. I don't want to waste my time teaching the person that isn't competent. That's not saying that like they can't do it, but it's just groupthink, hive mind, groupthink mentality. And so they just bandwagon because of Psy's narrative. I don't think that Psy is necessarily saying that like, oh, all of this stuff is pointless. I think that is the way I think about it is really just more a part of like his literal brand, his image. He has made it very easy for the person who knows absolutely nothing to fast track them to understand how this kind of works. And if they follow the rules that he does give, which they don't because they don't know how to do proper risk management, they would see that, oh, it is profitable. So now let's go back to the ICC trade. What's the ICC trade? The ICC trade that I was arguing about was a buy. So let's just say, like, I'm in this trade. First of all, it didn't trigger. That I know. But I was down here with it, telling them to buy. At every little drop, they was like, ha, you're an idiot. I'm like, all right, we'll see who has the last laugh. Guess what? I know it's about to drop again. Because there's sellers here. Well then, if it's about to drop, why are you gonna buy it? Because there's a bigger range at play. There's a bigger range at play. And then, hey, isn't it healthy for the market to go up to make a lower high, or to make a higher high, so we can come down to make another higher low, so we can go up and actually do what we need to do? Yeah. So I just know the flow of market, right? But the point is, let's just say what I was trying to get at was, let's just say we did enter into this buy, um, or whatever the case is, we entered in down here, and it wasn't a whatever, right? I'm trying to say this. So now, from a swing trade perspective, you entered here, um, off of what? Not confirmation, but just knowing that there are buyers here. And you went ahead and entered. Okay. If you actually had put your stop loss based on the larger range at play, which was this bearish range that got broken by this bullish range. In other words, the range responsible for making the indication, in other words, the trend responsible for making the indication, if you had actually put your stop loss below the low of that, you would still be in that trade, and now you would be in profit, and you would have a much better RR than all of your counterparts that are waiting for something like this. and they may not even see it. And guess what? They're gonna be trying to do this. Look, I promise you, this is what's gonna happen. They're going to take price, and it's gonna go up right here, and it's gonna close, and they're gonna try to enter because they're waiting for a candle to close above this level. But now they're not understanding, hey, the last time we were at current price, all we did was sell, and then they're gonna get trapped because the market is trying to take your money. It's not trying to give you no money. So now price is gonna come down. When it comes down, guess what? It needs to downtrend. It might do this. And now they're gonna start trying to take sells just for the market to buy off 50%. Do you see how we were using it as a resistance? Resistance, and then we broke it? Well, don't you think we have to use it as a support? Then just for the market to come all the way back up and then buy at the same price that they tried to get in at. But because they don't know order flow, they're early. They're not timing their entry right. So now when it comes to timing the entry, it's all about, hey, is there anything that has to be done before we play the bigger range? And if the answer is yes, then you wait, or you play the smaller range. If everything has aligned, if all of the stars have aligned for the bigger range to do what it needs to do, then that's when you enter based off the bigger range. I don't know how best to explain these things, but I know like when you guys go back and you practice this or whatever, and you rewatch this whole thing, it'll start to click and make sense, because it's not clicking fully right now. Okay. Before I started the live stream today, I was looking at price because I was supposed to start at 12, and I was looking at it right here, and I already had another chart or whatever marked up, and I saw, and I was like, bro, I totally want to buy that, but I didn't. Well, no, I couldn't because I had locked my accounts, but I would have bought this. Now, since I trade futures, let's go look and see how much that would have actually been. Hey, yo. Let's go look to see like how much that could have been just right here, because I saw it, right? Let's just say I knew we were going to break, and where would I have gotten out? As soon as we got somewhere where sellers were. So we're going to look at this particular move right here. I can bar replay it. I can even say I got in late, and I bid one. No, I'm tripping. I want to be on this contracts, and I trade micros, so I would have put in 10 to 20 micros, which is equivalent to 1 to 2 regular contracts, and then we would have got out somewhere like, yeah, right here inside that blue area. 1, 2, 3, 4, 5. I mean, that's 2K. Drop it down to a 1-minute chart. That's a $2,000 push. $2,300 push, and that's one contract. I'm not gonna lie, when I first started trading futures, guys, that I was not making $2,000 or $1,500 with one contract. And I started trading futures last year. So I'm more than willing to trade smaller contracts now these days. Because back then I was trading like on average 4 to 5 contracts or 3 to 5 contracts. If I did that, that would have been a $8,000 to $10,000 push. So, but when I show you how easy this is and how precise these entries are, guess what? We're gonna close it. We're up here. The last time we were up here, we sold. Yeah, normally, I wouldn't have even taken this because I wait until we get into the imbalance. So I know price rejects ultimately, but now, boom, right there. I kid you not. I'm looking at that. You guys might think I'm crazy, but that is a imbalance, and it's super clear right here. And I'm looking at this. Am I entering? Not just off a whim, but if I have an idea that it's gonna sell or reject at this 50% area because we just bought, and I clearly can see that there's buyers here. There was a lot of demand here. Price could come down to just somewhere in here, or price can come down, somewhere in here. I have an idea of where buyers and sellers are at. If you need the visual, I'm understanding that buyers are literally here and only buyers here. I'm understanding that this area was broken and this gap was created and there's only buyers there. This is where demand increased for us to break above old highs in the market, the high of this downtrend. So I'm using all my confluences and I'm like, all right, like look at how well that lines up. Look at the synergy and look at the amount of precision that I'm able to have because I'm sticking to just some simple rules. Highest highs of the trend, lowest lows of the trend, where are buyers, where are sellers, and now my 1 minute chart looks really crispy. So now that's my technical higher time frame. Why? Because it's higher than my 15-second chart. And I'm gonna sit here and I'm gonna wait. This is starting to look like a lower high, lower low scenario. So if price breaks this low, it could trigger the drop that I'm anticipating to get into this area of buyers. There's no volume in the market. It's literally in the middle of the day. And this trading day is about to end. So this is not really a good time to trade. But the point is, though, it should still play. It just takes longer because there's no volume. But now notice, since there's buyers in the market, they keep trying to hold the market up until the market gets flipped. Now this area where buyers were in control, sellers took it. But then now buyers took it back, using 50% of this area to sort of like try to use it as a support. Right? Right here. 50%. So we come down into that area, we're trying to buy it. They were trying to hold it, but then they flip it. So if I see something like this and say, say if the market continued, say this area flipped, and then we go up into an area where sellers are in control, I'm taking a short. So now let's kind of replicate something that I would do IRL. I would short this for about 2 contracts. Let's just go 1 candle. That's 380. 1 more candle. That's 7. I'm in an area where there's buyers. So I already know it's gonna go up. So why hold it, right? If I could hold it 1 more candle, I usually give it 3. And if it went down, which it did a little bit more on that 3rd candle, that would have been a ban. I'm not gonna look at a ban, or I'm not gonna look at $1,200 to $1,500 and let it go. I'm out. So I love to scalp because it provides me these opportunities over and over and over again. We go all the way down to the range. We start to buy. I don't buy against 3 candles. unless we break. That's gonna buy. I just know because it's how do I know? Price came down. That's one. And then it failed to make a lower low off this bigger range here. So that's already first sign number one that prices, that demand is what? It's increasing. Sign number two, we go up into an area of sellers. And since the bigger narrative is showing that we can't close below the low, all it does is it comes down to make a higher low. And this is further just proving the fact that we're doing this. Buyers are buying at higher prices. That's not what they're supposed to do. They're supposed to buy low, sell high. So if they're buying at higher prices, then it must mean price is low enough to push price higher. Duh. And then that narrative continues, and I just know it's gonna buy, and I even know where it's buying up to. I have an idea. Sellers. Right here. Sellers. Right here. So I can get in, I can use ICC, I could use price action, I could use my understanding of order flow, I can understand where I'm at in the grand scheme of things. Check this out. Low of the uptrend, high of the uptrend. Now, based on the bigger range at play, I'm also below 50%. And I'm also buying at 50%. So now when you start to add confluences to this, it stops being a guess, doesn't it? It's no longer a 15-minute gamble. I mean, no, a 15-second chart gamble. It's actually being based off this whole area of balance. Hold on. It's being based off this whole area of balance. Bro, I'm going to hurl this mouse across the room. Click and click. All right. My left click button is faulty. Anyway, that's a whole area of balance. This is the area that led to the market continuing to go up, or whatever it is, right? The point is, I don't know. And it's 50% of this overall imbalance. So where's the imbalance? The imbalance overall is from this high up to these lows. There is an order block inside the imbalance. That's what I'd be telling people to try to look for, and this is what I'd be calling Holy Grail. But now if I change my time frame, I'll go up just a little bit, now it disappears, and now this is a true imbalance. So now you start to see it's just about perspective. What did I see? What didn't I see? But look, so now when I talk about all these little tips and tricks, and you see a tip and trick in a video, and you see me mark something out like this, because I know that the market went up, down, and then up again. It made a little bullish candle, a little bearish candle, and then continued to go up. This is the same as this. I just can't see it, but I know it's there. So sometimes I shortcut my way and I just draw my boxes out like this, because I already know I know the ins and outs of this so well that I know that on a low time frame, it looks like an order block. You get me? And so it's there's in what I'm trying to say is that in theory, bro, this shit is not hard. The only thing that makes it hard is that it's always happening. And because it's always happening, there's always a trade opportunity. Like my girlfriend be asking me like, yo, like how can you just wake up and pull a trade out your ass? Like I'll wake up, go look at the chart. It'll be like some random time, it'll be like 8:18 a.m. I'll go on the chart and in 15-20 minutes I'm done and I've already made 2-3K. It'd be like, how can you just pull a trade out your ass. It's like, bro, it's because this dynamic is happening all the time. And what I do is when I come to a chart, the only thing I look at is current price, which means the current open price on whatever candle is currently open. I look to the left and I try to figure out what range explains what happened the last time where we were at current price. So I would look left and I would see, okay, I see we're buying. I don't really care that we're buying. What I care about is that this is the last thing that happened while we were at price. So I'm going to sell it, or I'm going to think about selling it. I'm not going to think about hopping into buys because it's going up or hopping into sells because it's going down. I'm going to look left and think about doing exactly what they already did the last time we were here. And if I'm lucky, or not lucky, but like if it's the proper analysis, then I'll go ahead and get me a little short. And guess what? Where's current price? Current price is down here, where just a couple minutes ago, the only thing that explains what we did was buy. So we bought. It's that simple. Oh, down here, when current price was down here, well, about an hour and a half ago, this was the last thing that happened at current price. So it bought. Or, hey, if price is all the way down here, the only thing that explains current price was what happened how many hours ago? Like, what is that? Eight 8 hours ago or so. So I have to go back in the chart 8 hours to see the last time, the most recent time we were at current price. And I'm using this data to do what I need to do now. I'm not selling it all because it's selling. I'm taking and positioning myself in alignment to whatever happened the last time we were here. And the last time we were here, we bought. So that's what I'm going to do. Let's go ahead and look at this area. Down here. And this is probably where I'm going to start probably ending this. How long have I been recording? 2.5 hours? Let's look at this area. This red line down here. To really summarize, to sum this all up. The only way we could have bought at this low is if the last thing we did when we were at this low was what? Was if we bought. How does that buy relate to the larger ranges now? Because a small range is inside a big range. Or what? How does this buy down here? What? I don't know. That's old. You just have to look back in history to see what was the most recent thing that explains current price. This is current price. What's most recent is not up here. You want to know why? Because current price is down here. So you follow the price line all the way to the left to see what was the last thing that explains where current price was, and that's what you do. If current price was down here, what I'm trying to say is that the only reason why it bought down here is not because, oh, it fell a lot and it needed to correct. It was, oh, at current price, and if I want to take a trade right now, I need to zoom out as much as I can. I'm on a 1 minute chart and I'm zoomed out as much as I can. So therefore what? I can't see what I need to see. So I go to a higher time frame. That's the purpose of time frames. So I can see what needs to be seen. I see it on a 5 minute chart. Do I need to go any higher? No, because I see what I need to see. So boom, this is current price. And then I'm gonna go back and I'm gonna look to see what happened the last time he was here. Let me go ahead and analyze this area, right? We're buying. I see that we broke a bunch of ranges, and I see that we rejected pretty hard from this area. And that led to just a break of this whole area. If I do go up to a higher time frame, let's look at it. Let's go to a 1 hour and let's go look. I got a whole gap. So this is a new week opening gap. So it's hard to do price action here. But point is, think of it like this. Price went up, price came down, and then price went up. Okay, the area that overlaps that is the order block. Boom. And so for some reason, there was a whole bunch of demand that said, hey, we're not going to allow you to just come up and make a, no, there was a whole bunch of demand that said, you know what, we're not going to allow you to come up and make a lower high so we can sell off because, you know, there's sellers here. Let's look at it. There's sellers here. We know there's sellers here. They entered into the market and broke structure. So now in the same area where there's sellers, they should have sold. They did here, but buyers held, and they held their demand. Buyers have more demand than sellers do, so they want to take price up. So now in the same area where there were sellers, buyers took over. They broke above that area, they corrected that area, and then they just took off and ran forever. So if this is what happened, basically what I'm trying to say is buyers bought. Or I could say they took control here. Then the next time we come down here, that's what I'm gonna do. Now watch how full circle this is. Yes or no? Did we get a correction at this price level? I'm going all the way back to ICC. Nope. So now an indication is nothing more than a fair value gap. A fair value gap is nothing more than an indication. They go both ways. It depends on your perspective, whatever. They're the same thing. An indication creates an imbalance. And if we never correct it, it leaves a gap in the market. There's still a gap in the market. Right here. If I drew it like that, there's still a gap in the market. So, because we don't have a correction. So we need price to come back and correct and complete the gap. It only did so whenever it thought it was time for this narrative, this big range to play out. So the point is we come down, complete the gap, and we don't close below the area of balance. We don't close below the low that explains this whole area. We also have other confluences. Buyers tried to buy there and all that kind of stuff to where we could try to snipe. But the point is, now that you know that this is where buyers took control, now let's go back and analyze it. Let's see if we can get a little bit more precise with where in here we want to try to buy or sell. I would say it really honestly doesn't matter. Just actually forget everything I just said because I'm trying to teach people to be less precise. But by being less precise, you're actually going to end up being more precise. Just literally, I mean, come on. by being less precise, by not trying to scale down and bottom tick the market all the time, you're gonna get a really solid fill on price overall. While everyone else is getting faked out, you're in at the lows of market structure, of price action. All you have to do is accept that this under this level is where you need to enter. So you can enter in it, or you can enter, put your limit order just roughly right there where buyers are. And then you could just adjust your risk and put your stop there. And now you would be up however much money so far. We would be up currently, if we had this open, a 1 to 3. It went up for a 1 to 4 already, and we know that the market is going to keep doing whatever it's doing. It's going to keep ranging and accumulating for however long, maybe until the end of the week, or like throughout maybe tomorrow, and we might get a buy or something, I don't know, like coming through on Friday. But this is a swing trade now, potentially. Or, something that you could hold. We'll see how far it could go up. It might only go up to here. It might go up to here. It might go up to here. I don't know. But the point is that with how these markets is moving, I don't even care how far up it goes. It's bread. It's hella money. Because the market is going crazy right now. That's why when I come over here and I'm posting a screenshot of a 15K trade, is really not that impressive when you think about it now, is it? I just showed you how with one contract it was like a 2K trade or a 3K trade. Okay, so now this is what? This is a this is 3 contract position. So it's that much more money, and I took 2 trades. So instead of making 2K, I made 6. And instead of making just 1 trade, I took 2. So instantly I go from, that's 12K a day. And that's one account. Which is why I'm telling people to trade futures, because it's like low-key free right now. It's free money out there. All you gotta do is enter where buyers are and enter where sellers are. That's it. And you don't need confirmation, because the confirmation is your experience as a person living in this world, paying bills and buying food. You already know this. And all of these people who move the market up and down, they know it too. Price action and technical analysis gives you the what. That stuff is totally important. I'm not trying to say this is not important. I never said it. I'm saying that this is one aspect, one perspective. And without this one, you're really trading kind of incomplete. Even if you don't dive deep into this, like I've done, or like how ICT has done, or whatever the case is, you still need to understand it. That's what I'm trying to say. An example of people trading who dive really, really, really deep into this, and they don't dive into this, those are people who come over here and they start analyzing things such as this. Volume. Because this is literally showing me where people are taking trades. If I wanted to delineate between up and down volume, it'll show me where there's more bullish volume versus bearish volume and all that stuff too. But I don't really care about that, because I can look at the candles to tell me if it's bullish or bearish. All I need to know is that, okay, there's a bunch of sells that happen, and I'm looking right here. I'm not looking here. Watch this. There's no volume right here. What does that overlap with? a big gap, but we say, oh, well, there's a lot of volume on this candle. Why isn't there none here? Because it didn't spend that much time to show how much volume was here. Notice wherever the market spent time at, that's where we get volume. So when we went sideways, volume here. When we went sideways, volume here. Wherever we didn't go sideways or we didn't spend much time, that was a gap in the market. Like, I'm literally only looking at this. But now if I look to price, oh, that's a gap in the market. That's a gap in the market too. Oh, well, look at all these gaps. That's cool. And guess what this is? An order block. So if there were a bunch of orders here, if and then the market made a decision to sell, it's telling me that, hey, demand right here decreased. Buyers tried to buy very briefly and they couldn't do anything and they decreased. Well, where's the order block at? I can't see it. You just have to understand that it's there. Price went here, up, and then made a decision to continue coming down. If you really, really, really need to see it, then go down to the time frame that allows you to see it. There it is. And then you realize it's nothing more than a lower high and a lower low in a trend. That's what an order block is. But anyway, so this is how I start to understand what the market is doing at where price is making decisions. And price is making these decisions because of this. This is the important stuff. And then now we put volume up on the chart. Notice and I'll go down to a smaller chart for this. Actually, I'll go down all the way to the 1 minute so we can really see the distinction. Okay, so I know that all of my green zones are gaps, right? Check this out. There's no volume there, right? So then where does the volume have to be? It has to be where the time is. I'm looking down here. Volume started to increase here, and then it started to decrease here. And what does that area line up with on the chart? It lines up with the gap. So wherever you have no volume here, you have volume here. Wherever you have no volume down here, you have volume up there. This is where price was at. This is where volume was low. Volume was high. This is where volume was low at as far as price is. This is where volume was high. Okay? Once again, here's another gap. Volume increased. We can see it increasing. Let me delete this for right now. We could see volume increasing where we have another gap in the market. I didn't learn this from nowhere, from nobody. I was just in a search for answers. And I got Zeke and friends and people who can vouch for this. I just went for about 6 months, 7 months, and I just tried to figure out, why is price moving right here? And I reverse engineered it because I like to find my own answers. I don't like to trust other people's answers. If I trust other people's answers, I would mark my stuff out wrong. People would then be like, well, You're simply just trusting your own answers. So who's to say you're marking out your stuff right if they're trusting their own answers also and they're marking out their stuff wrong? Is because I'm always trying to figure out where I'm wrong, because I only learn if I'm wrong. I only can learn a lesson if I lose. I can only be corrected, or I can only strive for correction or be correct if I am not correct. So I'm trying to constantly prove if and where I'm wrong because I'm taking this seriously. So I can trust myself. I trust the answers that I get, that I perceive, that I dive into. And I trust the answers that I give, even when I don't fully internalize an answer that I'm providing. I know the answer is true. So like when dude was asking me earlier about fibs, I'm like, I'm not gonna give you that answer just yet because I want to refine that answer for myself first before I give it out to y'all. And that's what it is. But the point is, guys, price action and technical analysis tells you what to do, and order flow and sentiment analysis, supply and demand analysis tells you why what you're looking at is even happening. And then, I mean, like the last key to the puzzle is fundamental analysis. That's news. And, we're all kind of subject to it anyway. But for those of you who study it diligently, you guys get to a point to where you can make really, really great long-term investments, or you can make great position trades. You guys who study news know, you guys who study news would have been people who have been holding this whole entire buy this whole time. So there's always a pro and a con to being limited to just only one of these perspectives. You know, they say like you need at least three legs to stand, right? Like a chair needs at least three legs to stand upright. And that's cool. And that's true. But that's if the chair is not in motion. You only need 2 points of contact on the ground to stay upright and to stay balanced. Think of a bicycle, a motorcycle. Think about your two legs. You only have two legs. You don't have three. I mean, some of us do. Shout out to all my black people. But like, you only got two legs, bro. Okay. So somehow I can still walk and stand. Even in place, I can walk and stand. So is it true that we always need three? You know, if I'm very, very, very functional with the two that I have, maybe not. So price action is important. Understanding where people are important because, you know, and fundamentals are important. I think if you simply just have two of these three pillars, you can be profitable. Any combination of them that you want. If you know news and you know where buyers and sellers are, you don't need price action. For real. You're always gonna have a little bit of it, but you don't really need to dive deep into it. If you have price action and you know where buyers and sellers are, you may not need news. If you have price action and news, then it doesn't really concern you what buyers and sellers are doing on a day-to-day basis. You have the news to tell you what overall direction the market's going to go in. And so you couple that with a little bit of price action, proper risk management, and you're good. Whatever combination of stuff you want, you can have. But, news, tricky. Price action should be simple. And that's integral. And that's the main thing that people need and use, technical analysis. So let's just say that price action, you can't get rid of that. You need to know, in my opinion, where buyers and where sellers are. You need to know market sentiment. You need to know that when most people want to buy, you should be looking to sell. How many examples have we seen where price is buying and then it gets to an area where it sold before and it sells? That's a prime example of most people are currently buying. Therefore, you should have the idea to do the opposite and short the market. You just have to do it in a range where there are actually sellers. That's how market sentiment goes. It's like this. Market sentiment will creep up. So let's just say, okay, people are really really trying to buy, and we're going from neutral to bullish to very, very bullish, and because it's buying. Then we get to an area of like greed, like it's buying, it's overbought, right? Okay. And with that, the way that sentiment needle is gonna look, it's gonna be all the way looking, it's gonna be saying strong buy. Because it's not analyzing an old range, it's analyzing how many people are actually bullish and in buys compared to the amount of people exposed in the market that are bearish. So it's gonna be saying strong buy. It's saying strong buy because you have people who are buying at out of FOMO at current price, and all of the people who bought in the past holding their position. So when you get to the level of like strong buy or whatever the case is, and then okay, it's gonna reverse, and at some point the market will it'll just drop. I'm taking the reversal because I know that the market is trying to A, make people lose a lot of money. Two, people are looking at the market vertically. They're looking at like prices up here, and they're looking at the fact that, oh, we've been buying to get there. So then they be like, well, let me keep buying. No, I look at the market horizontally and I see, well, if we bought from here, it means we sold from somewhere to get to that level where we bought. So now I'm looking back here and I see, oh, well, we sold back here, and I'm gonna look horizontally and I'm trying to get into shorts. I do not care about what's happening. Like, I don't care about like what has happened in the last hour or the last few minutes or the last day or whatever. I care about where's current price, because when I go to the grocery store, I can't time travel back in time and buy what was ever on the shelf that's no longer there. When I place my buy or my sell, it's always going to be entered at the current price on the open candle. So I need to fixate my mind on what the hell is happening, or what was the last thing that happened when we were right here at current price at current time. They sold. So I'm going to position my mindset to examine a short, or to look for a short. And the whole point of this is that you need a lot of people to lose money for a select few people to make hella money. Who's the few people that you think are making hella money? Institutions, corporations. Oh, well, those aren't people. Those are banks and bots and stuff and blah 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 and all that going on. Well, if you read the tax revenue code and you understand how things are structured in business entities and whatnot, they're considered entities. And you have what's his name, Mitt Romney, famously saying corporations are people. Corporations have their own identification numbers, just like how you have your own social security number. They're recognized as people. That's the whole reason why like trusts and LLCs and all this stuff, they're people. So I need to figure out, what did people do the last time we were here? I literally had to have that little bit of an argument, because people will just try to find anything to disprove this phenomenon out of ignorance and a bit of arrogance. But it is what it is. So for those who believe, because they have, those who have faith, especially those who have seen, this is all it is. So as far as I'm concerned, I think I did what I wanted to do so far today, which is just draw the connection between life and the chart to teach you supply and demand. What I'm gonna do either tomorrow or Friday is I'm gonna go live during New York session. Not gonna be trading per se, but maybe demo trading. But I'm going to be just showing this stuff play out live. We could do it now. I mean, it's London. It's not London session. It's Asian session. But I'm tired mentally, and I still have more work to do for some other things that I'm a part of. So anyway, I'm not ready to just necessarily just cut it and sign off here. I'm gonna leave like another 10, 15, 20 minutes for like thoughts, comments, questions, and concerns. Could I record that call? Yeah. Sure. Thoughts, comments, questions. I didn't read the chat that much as I was talking, so let me kind of go up and see what. Okay, I remember what was going on there. What's up, Blue? How does that buy relate? Okay, yeah, I don't remember the old question. For some reason, I'm having a hard time visualizing 1 to 2 candles as order blocks. I know, that's okay. Don't trip about it. Okay? Because there's levels to it. Don't trip. Don't trip. Stay at the level of like market structure and just like that you're comfortable with. Don't trip. Don't trip on that. What's up, Clint? You here? What's up, current price, look left, analyze structure, and people. Exactly. Find balance or imbalance that explains bullishness or bearishness. Execute on that range. Yes. Yes. Exactly. 100%. That's exactly it. When you put the chair together, you put the screws tight to keep it from moving to blah, 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 blah. The only thing that I have ingrained is to look left, see what happened, and trade that direction. I know I'm missing the 50. Okay, so you're just missing a little bit of technical stuff, but you're doing good. I already gave you a one-on-one the other day. I already told you, you're going to be straight. You're doing just fine. You're 3 weeks in. You're not learning nothing you need to unlearn. You're actually doing pretty good. Just watch the videos that I told you to watch and rewatch your one-on-one. Keep practicing because you're not going to see it yet until you forward test it. So let some time pass. Give yourself some grace. Give yourself about 2 weeks, a week and a half, and it'll click because you'll see it playing out. when do you think you will start the new Discord for the smaller group? My plan is to develop the structure, announce it, and get a wait list of people, and then sometime roughly by the end of the first week or something like that in November, open it for purchase. It's not free. Okay, I already told y'all that. No, answer no, bro. You're good. No, don't apologize, bro. You're being inquisitive. You're showing competence. You're asking questions. You're thinking. A lot of niggas don't think. So, straight. I'm hungry. My stomach is growling. I haven't eaten yet today. It's 4:20, 4:21. Nice. I just need I just need it to be clocking. Okay, for sure. That's good. Can I throw a chart in here? Yeah, sure. Go ahead. It's gonna be a 3 hour long video. I'm gonna post it on YouTube. Y'all see how much value was in the video, but watch, we'll, what you know, we'll see how many people complain that the video's too long. No one's telling you gotta watch it all the way through. I don't even watch movies that be 3 hours long. So and that's entertaining. So I get it. Go watch ICT. I know, bro. Like that's the thing. Low key, the ICT market, the ICT people is my real desired audience. That's the whole crazy part. Like I'm still a part of the ICC community and stuff like that. But my real audience is ICT people. Cause I'm a simplify all of the concepts that they're struggling with doing. And exactly, and they'll shift over. Like side doesn't really see like the potential like of what I'm trying to do for the overall movement that we had talked about a few however many months ago. But imagine like as big as all those ICT, as big as ICT is, I imagine if there's a way that I could like sway them all the way over and go from ICT to ICC, and they simplify all this stuff according to my perceptions, and it's just ICC. But you know what I'm saying? And it's like it'd be cool. In my opinion, I think it'd be cool. But like even me, like I know that my perspective, it's ICT-ish, but like it's simpler and I'm getting better entries than ICT traders. I have very good ICT traders and friends that I respect because they're really good ICT traders. And they're asking me, "Hey man, look, I I I need you to explain to me your perspective." And I'm like, "Bet, no problem." But we would trade together, and I would use them as an indicator to confirm if the buy that I already placed is actually going to pan out. Because I'll always enter before them usually, but then they'll enter like I don't know 5, 10, 15 minutes after me when they get their version of confirmation. Yeah, so it'd be cool. I don't see. I like when you say when you currently are in the store and see things already sold. It's like showing up to the market, watching current price. Yes, and looking left to see what's already going on. Yes, exactly. Perfect. I'll screenshot that one. That was basically the analogy I was trying to sway or bridge together. It's technically a new trading day and it's Asian session. This is what time I would normally start trading. So let me take a little quick look at the market. The market. Ay, ay, ay. Wow, dang, I didn't even see that I scoped that level out, huh? Yeah, because that was the range, and then we bought above it. I had already had that low marked out on this other chart that I just switched to. So anyway, all right. So I'm looking at this. Clearly, there's a gap here. I don't even need to mark it out. I see price broke this high. There's buyers here. Price action is as simple as expecting price to come down to here and buy. That's it. So if I want to be technical about it, let's start being a little technical about it. That is how quick I've processed this. Like, okay, look, area of balance, aka a wick. We've already bought above it. We've already made, like, I know that there's sellers here. Okay. So we're selling. But guess what? I know that there's buyers here. Why? Because we just bought above this bearish candle. This is a whole range. I'm on a 1 hour chart. We bought above that. There's buyers somewhere here. Scale down to a lower time frame. Start to do the analysis a little bit more, right? This was a perfect raid 1 and raid 2. Raid 1, raid 2 inside the actual ICT fair value gap. Right there. We went inside it. Raid 1, don't sell it. Raid 2, sell it. So cool, we're selling. Now, what led us to break this particular high? That's the indication. Okay, I see a couple things. I see an order block. Well, no, first of all, wait, let's do it this way. I know that we need to sell. I know that buyers want to buy at or below 50%. So the only thing that's important to me is anything that is at or below 50. So I'm not going to waste my time marking out anything else. I can already see in with, what I'm marking out. I see that, all right, there's basically a gap right here. Let me draw this back to the left. So because I want y'all to understand what I'm looking at. So that's the gap. This is the range I'm analyzing. That was broken, okay? This one. Because this range was created. So based off that range that made the indication, I know we can only buy roughly around 50% or lower. So I'm looking for an inefficiency. I'm looking for an area of unfairness. I'm looking for a gap. I don't see any gaps down here as far as candles go. It seems like everything that was broken was retested. So everything feels fair to me down here. Okay? However, things start to feel a little unfair right here. So I'm going to just analyze this area. That's my order. This is my gap. then this is my area of balance. Check this out. This is my lower time frame order block. This is that hard stuff that is hard to see. But I see it. Why? Because now I'm looking at my candles. Price was coming down, right? And then it went up and did this. That's the whole point, is that it made this little area before it broke not only the high of that I marked out, the high of this area, but also before it broke the high of the previous candle also. That's market structure. It doesn't look like it though until I go down low enough. Now it's market structure. So I can perceive this low time frame accurately on a higher time frame because I have reverse engineered and understood what I'm looking at. When I look at a high time frame candle back to back, I'm looking at low time frame market structure. So when you guys see me trade candles, I'm still trading market structure. I just chose to have this perspective because I understand it and I like this. I like the way these candles look more than I would on a lower time frame. This now I like noise, but I ain't never seen nothing like this. This is hella noisy. Green, red, green, red, green, red, green, red, green, red, green, red, green, green, green. That's too noisy for me. So I like this time frame because it makes sense to me. So I'm staying here and I'm perceiving what I need to perceive based on this time frame. If I mark something out, then I'll go look at a lower time frame to see what it looks like, or something like that. I can mark out the order block here or area of balance, and I can go down and I can perceive what I have marked later. All right, I got this general area marked, and I got this gap marked. There's an order block inside the gap, which is right there, and then there's that. So now I got everything that I need. I know where 50% is at. I already know that this is the level that needs to get hit because yes or no, did we correct at this level? The answer is no. There's a gap under here and all of this is lining up perfectly. The low of the order block inside the gap is liquidity that needs to get swept. Or if that's too complicated, we can say, well, I need to buy below 50% and I need a correction here. So now I have multiple conditions that are bullish showing me that I actually have a solid area to hone in on. That's roughly around 50% for me to buy and everything's cool. So if price comes down to there, I'll buy it. Now, am I going to sell down to this level? No, I'm not. I'm not, because if I did so, I would be breaking every rule that I'm trying to tell y'all that I'm trying to give y'all. If I'm not in a sell, in a range where I should sell, then I'm not selling it. And I'm not selling this because it's just dropping and I know it needs to test this area. I'm only selling in the range where we sold before, and I'm only buying in the range where I bought before. Those are the only areas where I can place a trade. I'm not going to place a sell all because it's coming down. I'm not going to be like, oh, well, Romel, isn't this ICC? That's an indication, right? No, it's not at all. Like, at all. Like, not at all. Is this the lowest low of a trend? No, it's a candle. Its price went up and made a higher low, and all of this is internal market structure in this uptrend. So that's not an ICC. That's not an indication. That's not a break of structure. We don't even have a clean break. Price went down, rejected. Okay, then price went and closed below the level, but it never even could close below the rejection. And it just made a swing point, which only happens when the market's reversing. Swing point, 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 swing, 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 swing high, swing low. So no, I'm not gonna sell that. But this is just this is now, I know I'm talking sternly, right? And I don't mean to talk sternly because, um, if you think that this is what you should do, then, and I'm not trying to like call you dumb or anything like that. I just get agitated when I've made at least 5 videos explaining why you don't do that. And I know that somebody who has watched those videos is asking me that question. So I just get agitated. I get passionate. But no, if I'm talking sternly, I don't mean to be trying to offend anybody who thinks that that's what they should be doing. But just know that's not what you should be doing. So, what are my trade setups? Well, I can't take a sell up here if we go back up. Why? Because it's not going to be the first time we were there. That's the last part to this whole thing too. I don't take these setups twice, y'all. I find a different, fresh reason to take a short if it's going to short. Yes, we shorted from this area. I'm already. If we go back up again, I'm not going to take another one because this already played. Price shorted from here, and the initial drop took us down to here. We've already played that range. We shorted from here before, and we went down to here before we made a bullish candle. We shorted from here, now we went down exactly to where we had the initial impulse. I'm not taking another short up here. If it goes up and it leaves these areas behind, I'm going to start assuming that it's going up for the purpose of breaking through it. I only take things that are untested. This has already been tested. If it's not untested, I don't take it. This right here is untested. A lot of y'all might be saying like, oh, like you might be having like an aha moment, but I've already said it so far today. When I say, yo, did we get a correction here? Did we get a retest? And the answer was no, no, no. So then that's why we enter. Here, that it would be the example of the opposite. Did we get a retest up here already? Yes. So then I'm not gonna enter it. Not entering into a short the next time we come up here. It might short. It won't be a short that I'll take. I'm not taking it. Because then what it does is it lowers the probability that I'm going to get a bearish reaction when that's what I'm looking for. The fact that if we come up to this high again, what does that tell me about demand? It's telling me that buyers have a higher demand. They're increasing in demand. And if they bring it up here again, that's not a good look for sellers. Sellers are supposed to, if sellers were strong, they should make lower highs. Why are they allowing buyers to bring it higher? That's not a good look. That's not that's not a good look for sellers. So I'm not going to be trying to align myself with them. This is the general rule. If we've already tested it, don't take it. That means it's weak. However, so you know what I'm saying? So I only take things that are untested. Things that are, the ICT word is unmitigated, if you've heard it before. Untested, unmitigated, same thing, uncorrected. I don't know. Untested. FBGs are one-time use. Yeah, in my opinion, overall, I do wait for the second raid for the overall move, but once the overall move has panned out, then yeah, I don't. They're untested. They're one use. Yeah. Oh, I'm hungry, man. You said I think it's clocking. You just did another 780 on accident. Nice. So what I'm saying, y'all, like I'm gonna help. I'm helping the world. I'm helping y'all. There's 58 people in this call right now. When I make this small group, I mean, there's 1,000 people in the server, 344 people trying to join, 58 people who have been here or are here, and I don't know how long you've been here. DeMar, you've been here since the beginning because you had raised your hand and tried to speak. So some of y'all real serious. Y'all been here, right? I'm literally gonna make a group that has a cap half the size of the people here. Take all these images and cut them in half. I'm gonna make a group and I'm gonna cap it. It's gonna be 30 people maximum. I'm gonna be live streaming in the mornings or whenever I'm trading. Maybe I'm gonna be doing these type of moments, these type of live streams on a more day-to-day basis, maybe like 2 a week. Uh, and y'all gonna be learning. The goal is to learn. Money might be a byproduct. I'm not promising nobody that I'm gonna make you money, even though I know I can and will. I'm offering this for people who truly view me as their mentor. Like, yeah, you may learn from a lot of other people, but like you're choosing to look at me like, yo, I want you to be my mentor. Um, it's gonna have a rate. If you can't afford it, don't try to buy it. Okay? Don't. Right? If you can afford it, do it. There ain't gonna be no refunds. Let me say that now. No refunds. I might make an exception for like it depends on what the reason is, you know what I'm saying? But just in a general sense, like no refunds. This is not a let me get in by get my phone number. Like nah, like for that purpose alone. Oh crap. I got my girl on my phone. I just kind of leaked that a little bit. Anyway, there's gonna be no refunds. Like that's like I'm not because once you have my number, you have my number. So for that particular aspect of the service I'm offering of the product, it's not I'm not refunding that. You're gonna have my number. Okay, you can text me, call me. No, wait, actually, hold on. Let me don't call me. Text me though, and and I'm gonna go through I'm gonna go through this. You know, this is this is gonna be the people that I answer first who have questions. Then it's gonna be the VIP people here, and then I'm going to open up the whole entire Discord community, and it's gonna grow. So this smaller group dynamic that we have going on is eventually going to end at some point. We have about 1,000 people. It's a relatively small group compared to what I'm saying how big it could have already been if I didn't close it, right? That small group dynamic when that goes away, that's what VIP is gonna be for. So there's 1,000 people in the group. One day there will be 1,000 VIP members, and there'll be 5,000, 10,000 people in the Discord total. But I'm still gonna keep a rotation of like 30 people in a separate Discord or separate group or something. That the purpose of that is so I can really truly mentor and brew success stories and get you guys profitable. It's not a place for you to come in and stay forever. You're not going to come in and pay me month to month forever. You're going to come in, learn however long you need to, get profitable, and leave. Open up a slot for somebody else. So I'll have about a 30-member cap, and then cool. Say like bet this month we got three people graduating out of it, or 3 people leaving, or let's just say if you ended it, you said okay I'm good, or hey I can't afford it, whatever. Bet I have a slot that opened up. I'll come back, tell the VIP members, or just tell the group in general. It'll be first come first serve. Kind of like a or I could do a lottery. I could do a raffle to make it fair. Be like hey, or to make it fun. Be like hey I got 3 seats. You know, um, only put your name in the hat if you have the bread, but we'll raffle it off. We'll raffle the ticket off. I don't know. Or if you just buy it, whatever. So that way, it's always going to stay capped and full at about 30 people. That's about how many I know I can handle, like deliberately. And then, yeah, or yeah, I can wait list it. That's a good idea. And I can just go down the wait list and ask them, hey, I got a free seat. Do you want it? Yes or no. They say no. Go to the next person. Hey, I got a free seat. Do you want it? Yes or no. Cool. Bet. Yeah, I could do it like that. But if I do it like that, the wait list is gonna grow and it's gonna be hella long. And eventually, once I get into the flow of things, maybe at some point in the future, I might double the seat count. I might be like, okay, I can do 60 people. And then I'll get to a point to where I know the cap will be 100. It will never go over 100 ever. I don't care how long I live. It'll never go over 100 people. Um, because then you got to imagine as people rotate in and out, they're gonna have my number, bro. That's like all this, But I want to make that connection with the people who actually. That's like what I think mentors should do. Because if you're it, imagine every movie you've ever watched. If you have an apprenticeship, and it's a very nice one-on-one dynamic usually, right? And but do you know how much dedication the master has to the student? That's what I'm trying to do. A guru would be the opposite. A guru would be somebody who has a lot of people who comes in, and the people make a commitment to the mentor, or the people make a commitment to the guru. The guru has no clue that Jackie and Chris exist, but Jackie and Chris think the world of the mentor. But the mentor has 30,000, 70,000, 120,000 people, 400,000 people. He doesn't know Jackie and Chris. So that's a guru. I am trying to make an apprenticeship type deal to where I am trying to make a dedication to the student. I'm trying to make it a two-way street. I'm trying to be, and I'm not trying to do it by like some, pay me $5,000 and I'll mentor you for what, a month. No, that exists. And I know people who have paid that. Like, I'm not doing say, oh, give me 1,500 for, I'm like, no, it's gonna be pricey. It's not cheap, but it's not gonna be the most expensive thing in the world. Like, if you be funding your accounts and blowing them, you can afford it. I'll put it like that. And so, um, or like if you be wasting money on Top Step accounts and blowing them anyway, you can afford it. Okay. So, the price, I have a price figure in my head. I don't want to say it because I don't want to like say it and then I want to change it later. But what I will say is going to be somewhere between like 250 to 350 per month. So like it's pricey, but you're getting my phone number. This is my girl. She's so pretty. Anyway, so word. yeah, like I trust that like I'm not gonna make the guarantee, but I mean like it would be unreasonable to I don't know how you would I don't know how you would come in and be there for 2 months and not make 5 bands. You have 60 days, 40 trading days, 20 trading days a month, 40 trading days to get you a Top Step account and apply this really simple principle and learn and maybe trade with me or whatever the case is. And you're not gonna get one payout. It makes no sense to me. So I just don't understand like you know what I'm saying? So yeah. So anyway. So anyway, that's something I'm gonna offer on the side. I'm not offering it in mass. I don't want to hear nobody telling me that I'm taking money from people, boo 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 boo, and none of that. It's my way to try to figure out how I can make a commitment to a student, right? And then the perk is once you have my number and you done, maybe you only need to be there 1 month, 2 months, whatever, or maybe you want to. I don't want to. Actually, I probably do need to put a cap on how long you can stay. Because if you stay forever, then it takes away the purpose of why I'm making it. I want people to rotate out. So I probably do need to do like a 90-day, 1 quarter, like like a 3 month cap type deal. Like if you haven't gotten it in 3 months, then I don't know what you're doing. But then if you decide that you just want to stay for some reason, then I don't know. Maybe you have to up the member count and then I can loop you into. See, I don't know. I'm still trying to think about doing it. Maybe I'll up the member count, and then I'd be like, okay, 45 people because I got 15 that just want to stay just for the sake of staying. I don't know. I really don't know how I'm gonna do it. So, but the point is that once you have my number, you have my number, right? It is what it is. So this is a 3 hour and 36 minute long video. Um, I got some other things to do. I have some other discourse to structure because this is not my only Discord server. Actually, I got another Discord, but it's for a different purpose. It's for my success stories to teach. So I admin the server, but I have success stories already, and so I have another Discord where my success stories go teach people their perspective or what they've learned or from their whatever to help free up some of my time. So say if there's like a beginner and I don't want to spend time with the beginner, I'll send them over to them. So but I'm gonna go over there and work on that Discord a little bit and then figure out how I'm gonna structure the future private group and I'll keep y'all in the loop. But this will be a good video. I'm a live stream. I'm basically showing y'all what I'm gonna be doing for the private group this week, like for the rest of the week, like big live stream day like today in the books, and then the next day we're gonna trade live in the morning. So I'm gonna wake up tomorrow, live stream, and not for the purpose of us making money. Let me be clear. If you make money by as a byproduct, that's the goal. But the main goal, overall goal, is the education. We want to see everything that we are talking about playing out live in the market. So we're gonna be forward testing everything we went over. So expect me to be in here at some point during New York. I'm not saying I'm gonna be in here at the start of New York. I don't know when I'm gonna be at, but I'll be in here sometime in New York session, and we'll be forward testing everything that we went over today. Um, and yeah. So with that said, I'm gonna go find something to eat. I'm gonna go on about my day. Y'all stay smooth. Look forward to an announcement in the coming week ish about all the stuff that I'm thinking about doing. And then that's it. I thank you guys for being a part of the movement and whatnot. I mean, like I already scrolled down and saw faces. I got people who've been around for months. Back when VIP was only $20, there's still people who pay me $20 a month. Then there's some people who pay me $25 a month, and then there's some people who pay me $50 a month. But I don't ever see myself increasing the rate past 50. Part of that is because it's cheap for people to afford, and then part of that is because I know that I can reach people. So volume over, you know what I'm saying? Um, and it's just business. And then what else is there? Uh, so yeah, so if you don't feel like VIP is worth it now, you'll soon feel it. Give it give it a couple months. When this group has thousands of people in it, you'll be like, dang, I really can't talk to this nigga. You'll you'll be like, all right. So, but for right now, it's cool, and I'm gonna catch y'all when I catch y'all. I actually need to do some trading. I'm not gonna trade right now. I probably might trade London session tonight or just trade tomorrow morning. We'll see. But yeah, peace out, y'all. Wow, this is crazy. I'm clicking the end button, right? But my mouse is not working, so it's this awkward moment of me trying to hang up and it's just not working. Okay, here we go. That's funny.